responsable de gestionarlos de manera sostenible. De esta forma, la sostenibilidad deja de ser un componente adicional y se convierte en un componente central del perfil profesional de quien dirige un proyecto y de quien lo gestiona. Y entonces, pues, IGMA de alguna manera entiende y muestra, y hoy es la oportunidad para hacerlo, cómo esta trayectoria global nos indica que no solamente estamos hablando del éxito técnico de un proyecto con las habilidades y las competencias que tiene un gerente, un director de proyectos, sino que el éxito es que el proyecto sea sostenible. Y será sostenible al generar valor ambiental, social y económico, al actuar con ética, transparencia y buena gobernanza, a contribuir con los objetivos de desarrollo sostenible y la sostenibilidad del territorio y la organización. Entonces, la invitación es identificar cómo en este rol del director de proyectos ya no se trata solo de administrar tareas y recursos, sino de liderar con propósito, impacto y sostenibilidad. Bueno, esta es una breve introducción. Los dejamos con esta pregunta que será transversal en toda la conversación que tendremos en adelante, y es qué tan sostenibles son los proyectos que estamos diseñando y dirigiendo hoy, entendiendo que esta es la pregunta central que nos lleva a la reflexión y bajo la cual pues IGMA trae para ustedes esta certificación que esperamos sea de todo su interés. Muchas gracias y bueno, quiero dar entonces inicio a nuestros panelistas. Quiero dar la palabra a nuestro primer panelista. Vamos a hablar primero sobre el pilar ambiental. Nos acompaña Lorenzo López, presidente de IPMA México, con el, digamos, dirigido hacia el enfoque ambiental en la dirección de proyectos. Lorenzo es gerente de capacitación de IPMA México, autor, consultor, practicante y profesor en dirección de proyectos y estrategias organizacionales para la sustentabilidad, miembro del Sistema Nacional de Investigación de Investigadores e Investigaciones NI y CONACYT. Lorenzo, muchas gracias. Hice un resumen, creo que muy corto de tu perfil, pero creo que ahí tenemos como lo principal. Así que adelante.
Nada más una claridad,
Creo que no es
Silvana,
presidente.
que Lorenzo López es gerente de capacitación experto de IMA México, pero
Sí,
el
sí.
presidente de IMA México es Jorge Pirt, que está entre la audiencia.
Ay,
Eh,
gracias, Carlos, y bienvenido también nuestro presidente de IPMA México. Gracias por la aclaración. Lorenzo, muchas gracias por acompañarnos y creo que acá paro esta presentación.
Sí, creo que ya se está viendo mi presentación.
Sí, la estamos viendo.
Muy bien, ¿no? Pues muchas gracias. Un gusto poder compartir 5 países que trabajan muy intensamente en la formación y en que todos los proyectos sean exitosos. Es un gusto participar con ustedes. Guatemala, Colombia, Panamá, Perú y México. Y bueno, desde IPMA México queremos compartir un poco por qué es importante el enfoque ambiental dentro de lo que es el ESG en la dirección de proyectos. Todos reconocemos, y no voy a ahondar mucho, pero sabemos que el mundo está viviendo un momento crítico, que el clima se encuentra actualmente con una transformación que nos va a afectar como sociedad. Ya estamos en algunos indicadores en un punto de no retorno. El panel intergubernamental de cambio climático en su último reporte pues nos habla de que no hemos hecho lo necesario para que al momento de enfrentar el cambio climático pues podamos reducir las emisiones con todos los efectos que este trae. Por otra parte, también hay evidencia a través de lo que le llaman los límites planetarios, donde podemos establecer una zona segura para poder realizar nuestras actividades, todas orientadas hacia satisfacer nuestras necesidades en cuanto a los flujos biogeoquímicos hacia el agua, los cambios de uso de suelo, la diversidad, el cambio climático. Y lo único que hemos visto es que de los 9 límites planetarios ya sobrepasamos 7 y que la tendencia pues es irreversible en el sentido de que estamos afectando a otras especies y estamos de alguna manera comprometiendo también nuestro futuro. Pero también creo que en los temas ambientales tenemos un problema porque no vemos una visión integral, no logramos comprender de manera integral todo lo que está pasando, que tiene que ver con una crisis hídrica, con salud, con la toxicidad de los químicos que generamos y que liberamos en la atmósfera, lo que tiene que ver con los contaminantes, con la ecotoxicidad, la escasez de recursos. No debemos centrarnos nada más en las emisiones de carbono, sino considerar de manera general todos los impactos que los seres humanos generamos en el planeta. Y entonces, bueno, lo que la mayor parte de los expertos, en muchísima literatura que comenzó desde 1962 con La Primavera Silenciosa de Rachel Carson y luego Los Límites del Crecimiento en 1972 hasta la fecha, pues la mayoría coinciden en que tenemos que repensar nuestra relación con la naturaleza, que tenemos que comprender cuál es el impacto que estamos teniendo y para ello existe una serie de herramientas como lo es la huella ecológica, que tenemos que aprovechar y utilizar la energía de una manera más eficiente, apostando por las fuentes de energía no renovables, que tenemos que proteger el agua, repensar el consumo y sobre todo promover la participación de todos para poder enfrentar como sociedad, como humanidad estos problemas. Cuando hablamos de sustentabilidad y la parte ambiental que se incorpora ahora dentro de las estrategias con el ESG, bueno, es hablar de la capacidad que tiene un sistema, proceso o actividad para poder continuar sin agotar los recursos naturales ni causar un daño significativo al medio ambiente. Hablar de sustentabilidad no solamente hablar de ecología, de medio ambiente. Y esto en la dirección de proyectos implica que debemos gestionarlos de una manera sustentable, considerando impactos económicos, sociales y ambientales, buscando lograr una integración y un equilibrio de estas variables, sobre todo anticipando consecuencias más allá de los entregables de un proyecto, sino sobre todo no comprometer a las generaciones futuras y la capacidad que tengamos en el futuro para poder satisfacer nuestras propias necesidades. Entonces, en lo que es el pilar ambiente o en ESG, por su nombre en inglés, pues tiene mucho que ver con gestionar cuál es esa huella, ese impacto que estamos nosotros generando por nuestras actividades productivas y que ahora lo tenemos que incorporar dentro de los proyectos y que básicamente lo medimos a través de las emisiones de CO2, pero tenemos que tener una visión mucho más holística, mucho más sistémica para aprovechar de manera eficiente los recursos, incorporar esquemas de economía circular y sobre todo gestionar los posibles riesgos ambientales. ¿Qué cambios trae la incorporación del ESG dentro del ciclo de vida de los proyectos? Bueno, en la fase de inicio, pues ahora tenemos que identificar impactos posibles, lo que es una evaluación de impacto ambiental, pero también social y de gobernanza. Tenemos que establecer cuáles son los aspectos relevantes sobre los que va a incidir el proyecto durante el desarrollo de su ciclo de vida y sobre todo contar con una línea base para poder medir y monitorear los impactos. En la fase de planeación tenemos que generar también objetivos desde el punto de vista ambiental a través de definir estrategias de mitigación, adaptación, soluciones basadas en la naturaleza, economía circular. En la fase de ejecución, pues tenemos que llevar a cabo un trabajo de gestión de procesos mucho más holístico que nos permita monitorear esos impactos que nosotros identificamos en la fase de inicio, gestionando recursos, perdón, residuos y emisiones, y en la fase de control, pues buscar de qué manera poder reducir el impacto con los recursos del proyecto, hacer las correcciones que se tengan necesarias. Y en la fase de finalización, pues también viene ahora un nuevo desafío para los directores de proyectos, compartir esas lecciones aprendidas, documentar lo que se ha realizado, cuáles son los beneficios post proyecto y sobre todo, porque ya las empresas están obligadas a hacerlo, es medir el impacto de esos indicadores y cómo el proyecto contribuyó a mejorar, a reducir las emisiones, a mejorar la calidad ambiental y sobre todo a favorecer estrategias de adaptación, de mitigación al cambio climático y soluciones basadas en la naturaleza. Y por lo mismo, en adecuación al estándar de los que nos va a platicar José Reyes hacia el final de nuestras presentaciones, pues cada elemento técnico tradicional para quienes estén mucho más compenetrados en los 28 elementos de competencia de IMA con ese ojo de perspectiva, personas y práctica, pues cada elemento se empieza a redefinir para incluir tanto impactos sociales, ambientales y de gobernanza. Y vamos a ver algunos casos. Por ejemplo, en el diseño del proyecto, pues bueno, la perspectiva ahora es no solo cumplir con criterios técnicos, sino asegurarnos que el proyecto realmente contribuya a la estrategia de sostenibilidad de la organización y a lo que la sociedad también está demandando. Una acción clave que tenemos que llevar a cabo los directores de proyectos es de manera proactiva eliminar, reducir impactos dañinos, adaptar el diseño a la complejidad social y ambiental del entorno y en la instrumentación, pues utilizar enfoques cada vez más flexibles o adaptativos, además de que tenemos que incorporar en nuestro bagaje, en nuestra solvencia técnica, conocimientos de sustentabilidad que debamos aplicar a lo largo del ciclo de vida. En el elemento de competencia de requisitos y objetivos, pues tenemos que incluir de manera explícita los impactos en la sociedad y en el medio ambiente del proyecto, sobre todo para identificar aquellos no deseados, sobre todo con los stakeholders. Eso nos lleva a una gestión distinta también para alinear los objetivos ambientales con beneficios esperados y que en los entregables también existan estos indicadores y resultados de sostenibilidad. En lo que se refiere a recursos, básicamente tenemos que aplicar la estrategia de la economía circular, promoviendo una gestión eficiente del agua, de la energía, de los materiales, reduciendo el desperdicio. Y para ello, bueno, ahora el director de proyectos y su equipo tienen que hacer una selección responsable de los materiales. Conforme pasa el tiempo, en los próximos años, cada vez va a ser una mayor exigencia de que tus proveedores tengan compromisos claros y en algunos casos que puedan demostrar que tienen una tasa neta de generación de gases de efecto invernadero o de cero carbono, pero también con los impactos humanos que tienen que ver con diversidad e inclusión. Y por ello, bueno, pues hay que considerar todos estos recursos dentro del ciclo de vida complejo, planificando de mejor manera lo que se prioriza en reducción de desperdicios y el uso de materiales cada vez más sostenibles. Las partes interesadas, de las que seguramente Germán va a ahondar un poco más, pues requerimos de una mayor inclusión de todas esas partes interesadas, pero también algo muy interesante, tenemos que incorporar también lo que nos exigen esas partes interesadas no humanas. Nos referimos al medio ambiente, que la legislación ambiental es un actor difuso, pero que la mayor parte de las constituciones de nuestros países en América Latina pues consideran como una responsabilidad del Estado el garantizar un medio ambiente sano. Pero también las necesidades de aquellas partes involucradas que todavía no existen, que no están presentes y que nos referimos a las generaciones futuras, porque el elemento fundamental de la sustentabilidad es garantizar que las generaciones futuras puedan satisfacer sus necesidades, lo cual lleva a un análisis mucho más profundo, a diseñar estrategias de un mayor involucramiento que alineen intereses diversos para un futuro colectivo y sobre todo pues incluir estas variables de impacto ambiental en las matrices de análisis de partes involucradas, por lo cual el análisis de partes involucradas ahora adquiere mayor complejidad y sobre todo un enfoque participativo mucho más temprano. Y por último, en lo que es vamos por poner un ejemplo, en el elemento de competencia de cambio y transformación, Pues la perspectiva es que ahora tenemos que entender que los proyectos son instrumentos, vehículos para una real transformación social y organizacional hacia la sustentabilidad, donde gran parte del trabajo de ahora el director de proyectos es gestionar la resistencia al cambio, considerando los diferentes aspectos del equipo y sobre todo capacitarlo en estas competencias necesarias de ESG para poder generar planes que evalúen cómo el proyecto contribuye al desarrollo sostenible. Es decir, los proyectos son una forma de adaptación sostenible y un elemento fundamental para una transformación ambiental positiva. Algunos ejemplos de proyectos, por ejemplo, proyectos de infraestructura vial que tienen impactos negativos en altas emisiones de CO2, pérdida de hábitats, afectaciones a la biodiversidad, el ruido. Pues ahora en los proyectos tenemos que incluir medidas de mitigación como pavimento ecológico, compensación de la huella con reforestación, arborización, con barreras acústicas, el monitoreo de la huella de carbono, la biodiversidad, la calidad del aire y sobre todo, bueno, pues beneficios de una mayor conectividad, de uso eficiente de la energía. Otro ejemplo, por ejemplo, son los parques solares, electrolineras, donde pues, tienen un impacto positivo para reducir cierta cantidad de toneladas de CO2 al año, pero también requieren de una gestión eficiente del suelo, del uso del agua, de una manera que pueda ser reciclable, que no genere grandes pérdidas, buscando la economía circular, como puede ser el reciclaje de los paneles solares, componentes reutilizables, para poder obtener energía limpia, mayores empleos a nivel local y sobre todo beneficios comunitarios. Y en proyectos agrícolas, pues también está todo lo que tiene que ver con agroecología, con permacultura en las zonas rurales, donde el elemento ambiental se integra tanto en el suelo como en el agua, como en la gestión de plagas y enfermedades, la biodiversidad y sobre todo la regeneración de los territorios, utilizando bioinsumos que puedan ser más orgánicos y con ello pues, tener un impacto en la resiliencia, ingresos más dignos, ecosistema recuperado. Eso es a lo que ahora estamos llamados los directores de proyectos. Tenemos un mayor compromiso para hacer posible esos objetivos ESG que ahora las empresas están llamadas a realizar. Y por lo tanto, el director de proyectos se convierte hoy en día en un agente de cambio crucial para impulsar la transformación sostenible de las organizaciones y responder a esos grandes objetivos que nos hemos trazado como sociedad, como lo es los objetivos del desarrollo sostenible y la Agenda 2030. Incorporar el elemento ambiental en la estrategia de la organización tiene varios beneficios. Bueno, pues la ventaja competitiva con proyectos que generen una diferencia. La reputación organizacional que ahora es fundamental, donde no nada más es tener una visión y una misión, sino cuál es el propósito, cuál es la contribución que hace la empresa con sus productos, con sus servicios a la sociedad, atrayendo también inversores comprometidos en la sustentabilidad, toda esa parte de los stakeholders, los consumidores, favorecer eficiencias operativas que permitan reducir recursos, residuos, consumo energético y sobre todo cumplir con regulaciones que cada vez van a ser mayores y más exigentes en términos ambientales con las empresas, con las organizaciones y lo más importante, generar valor a largo plazo para todas las partes interesadas humanas, no humanas, existentes y no existentes. En el caso de México, ya tenemos las normas de información de sostenibilidad que son obligatorias a partir de 2025 para aquellas empresas que cotizan en bolsa, pero que también para toda su cadena de suministro ya se convierte en un gran desafío, sobre todo las pequeñas y medianas empresas que ahora tienen que incorporar y que tienen que demostrar objetivos porque las normas de información para la sostenibilidad en México nos plantean 30 indicadores, 16 de ellos que tienen que ver con el tema ambiental, principalmente en gases de efecto invernadero de diferente alcance, en energía, en el uso y manejo del agua, las aguas residuales, tratamiento de aguas, el uso del suelo, los residuos, pero también tenemos indicadores tanto cualitativos como cuantitativos en la parte social y en la parte de gobernanza. Esta norma que es obligatoria a partir de este año y que el próximo año ya tienen que empezar a generar sus reportes en esta segunda etapa de gestión de riesgos, pues establece aquellas disposiciones que son aplicables para revelar su información de sostenibilidad. Ya no es solamente algo voluntario en el caso de México, ya es algo obligatorio porque dentro de la cadena de valor muchas empresas y pequeñas empresas ahora tienen la responsabilidad de demostrar las estrategias, las actividades, las acciones, los objetivos, los indicadores en materia ambiental. Por último, pues el fundamento esencial de la sustentabilidad es la equidad intergeneracional. Ahora los directores de proyectos estamos llamados a generar proyectos con propósito, con mayor impacto. Y en IPMA México estamos preparados y vamos a lanzar el próximo año, y ojalá que lo hagamos también con las diferentes asociaciones de IPMA en Latinoamérica, un ambicioso programa de formación de directores de proyectos en temas de ESG para que comprendan y para que los proyectos sean el elemento fundamental, porque creo que son la clave para que las estrategias y los objetivos ambientales, sociales y de gobernanza que ahora la sociedad le demanda a las empresas puedan hacerse realidad. Muchas gracias y esperamos sus preguntas más adelante.
Lorenzo, muchas gracias a ti por compartirnos todo ese tu conocimiento, cómo los proyectos gestionan los impactos ambientales, se integran al ciclo de proyectos y también se vinculan a las competencias de ICB4 y también por esas lecciones aprendidas, en este caso la nueva normatividad. En el caso de México, sin duda eso hace muy valioso este diálogo regional. Y digamos así, quiero dar paso a nuestro siguiente panelista, invitarlos, como tú también lo señalabas, Lorenzo, a que puedan compartirnos las preguntas que estaremos leyendo hacia el final de la sesión. De nuevo, mil gracias. Nos acompaña nuestro siguiente panelista, el pilar ESG social, Juan Carlos Godfrey, presidente de IPMA Colombia. Juan Carlos tiene una trayectoria de más de 20 años en formulación, dirección, evaluación de proyectos en América Latina. Desde 2020 preside ADIMPRO, IPMA Colombia, y es experto en competencias profesionales y cuenta con un posgrado en pensamiento complejo. Gracias, Juan Carlos, por acompañarnos esta noche.
Muchas gracias, Silvana. Por ahí había unas manos levantadas, yo creo que más tarde se les podría dar la palabra. Entonces, quiero pues, ser breve y creo que ya Lorenzo y Silvana ya han allanado el camino de lo que voy a exponer a continuación, que es la parte social de ESG. Eh, me gustó mucho lo que dice Lorenzo, que las partes interesadas son personas existentes e inexistentes. Quiero pensar que se refiere al futuro. Es decir, las personas inexistentes son las que todavía no están, pero estarán en un futuro. Entonces, esta parte social tiene que ver con las personas que están al interior de nuestras organizaciones y al exterior, que pueden ser partes interesadas, pueden ser beneficiarios o afectados de los proyectos. Eh, bueno, ¿qué significa esto de considerar los aspectos sociales? Bueno, de acuerdo con los criterios ESG. Bueno, pues es poner el foco en las personas. Eh, Muchas veces se nos olvidan las personas, tanto las partes interesadas, los beneficiarios, pero también hacia el interior de las personas. Entonces, lo que busca es que todos los proyectos impacten en una mejor calidad de vida, la equidad y la justicia y el bienestar de de todas las personas involucradas. Y eso implica lo que se ha denominado como la creación de valor, ¿no? Todo el mundo habla de la creación de valor, que no es otra cosa que los beneficios sociales que pueda tener o deba tener los proyectos, ¿no? En estos temas sociales existe un enfoque tradicional, ¿no? Donde eh, era evitar accidentes laborales, toda la parte de seguridad y salud en el trabajo, enfocarse en los intereses de los patrocinadores, de los sponsors, el cumplir los contratos y ya. O sea, esa parte era como que la parte ética, social que se vislumbra. Ahora con el eje social, pues importante que los proyectos promuevan el bienestar, la formación, el desarrollo, la diversidad y la equidad. Incluir a comunidades y grupos vulnerables con voz y voto, con una participación que acá en Colombia se está hablando de este concepto de participación incidente, que realmente sea una participación activa en la toma de decisiones. Casi siempre pensamos en los participantes en los proyectos como unas personas que hay que preguntar, consultarles, pero nunca son participantes activos, ¿no? Entonces, el nuevo project manager tiene que tener una integridad, transparencia y responsabilidad social ante todos estos aspectos. ¿Qué significa la parte de incluir la parte social en los resultados? Por un lado, los entregables, pues tienen que cuidarse, tienen que prever esta percepción social de que van a impactar a la sociedad, ¿no? Entonces se pueden desarrollar ejemplos, por ejemplo, en infraestructura, ¿no? Tiene que tener toda la parte de accesibilidad, de equidad, no solamente pensar en la obra en sí misma. Por ejemplo, cadenas de suministro justas para que las condiciones laborales se cumplan, todo el tema de trabajo digno, de acuerdo con la OIT, está muy claro, cumplir los derechos humanos, la inversión local, que los programas de desarrollo de proveedores generen capacidades sostenibles en la región, en las regiones donde se desarrollen los proyectos. El famoso concepto que está también muy en boga en México y en otros países, que es el valor compartido. Eh, y los beneficios, esa es una cosa muy interesante. Ya desde hace algunos años, con la ISO 21502 e IPMA ya lo venía diciendo desde hace ya varios años, lo que importa son los beneficios, los efectos, las funcionalidades del proyecto. No es solamente los entregables y el logro del el alcance, tiempo y costo y calidad que señalaba Silvana, sino también es el bienestar a largo plazo que se pueda generar en la calidad y que se sostengan esos beneficios, generar confianza, fortalecer el capital social, reducir conflictos, que se puedan estar presentando en un futuro por un proyecto. Recuerden ustedes aquí el concepto de acción sin daño, que se generó hace muchos años en el ámbito de la cooperación internacional. Aquí cobra significado de forma trascendental. O sea, los proyectos tienen que beneficiar a la mayor parte de las partes interesadas, incluidas, como decía Lorenzo, a los que no hablan, ¿no? Como es la naturaleza, ¿no? Y obviamente el desarrollo de competencias, ¿no? Que esa es una parte que también se nos olvida como parte de los beneficios a largo plazo en las partes interesadas. Entonces, en las competencias clave, diríamos, ya hablando un poco de lo que habla la ICB4, diríamos actualizada en la Dirección de Proyectos Sostenibles. Algunos de ustedes quizá conozcan la ICB4 de proyectos, pero ahora la ICB4 de Dirección de Proyectos Sostenibles nos plantea nuevos desafíos, ya nos ha ejemplificado algunos Lorenzo, y bueno, por ejemplo, en la parte de la competencia para IMA muy importante, que es integridad y fiabilidad, pues obviamente la parte del respeto a los derechos humanos y no solamente en el mero cumplimiento legal, pues es importantísimo. Gestionar la diversidad y de culturas, entendiendo la posición, los intereses de todas las partes involucradas. Esta es una parte que nos cuesta mucho a los que dirigimos proyectos, es no entender las diferentes posiciones, intereses, expectativas, sueños de todas las actores involucradas. Es un tema que nos cuesta muchísimo, pero esa es una parte que ahora en la competencia de cultura y valores que nos plantea la ICB4 es muy relevante. Obviamente la parte de los cumplimientos de estándares, ya nos hablaba algunos de ellos Lorenzo, entonces también tenemos que aplicar estándares de responsabilidad social enmarcados, por ejemplo, en la ISO 26000, las normatividades laborales y los derechos humanos pertinentes. Aquí hay que recordar una cosa que a veces es difícil de cumplir, pero eso nos pasa, ¿no? Naciones Unidas, por ejemplo, habla mucho de la equidad, de la inclusión, pero muchas de sus agencias plantean políticas pues no muy buenas en términos laborales hacia su personal. En fin, hay un mundo de contradicciones en esto, pero es el mundo que nos tocó y que tenemos que encarar ya con esta nueva visión. Entonces, las competencias de personas o que hace alusión la ICB4, pues tenemos que ampliar, ¿no? Y ser muy genuino en incluir todas las partes interesadas que puedan ser beneficiarias o afectadas, ¿no? Y fomentar lo que yo he hablado hace un momento, la participación genuina, activa de todos, ¿no? Inspirando con liderazgo soluciones que equilibren los beneficios para todas las partes, ¿no? Y que esto impacte positivamente a las personas. Obviamente el trabajo en equipo y la otra competencia, resolución de conflictos, pues cobran mucha relevancia en el manejo constructivo de los conflictos que se puedan presentar, porque ustedes saben, pues los diferentes actores tienen diferentes percepciones de la justicia, del uso de recursos, etcétera. Entonces, este tema del relacionamiento, la negociación, el manejo de conflictos con las personas, pues es mucho más relevante ahora en el enfoque ESG, ¿no? En las competencias técnicas o de la práctica, pues la gestión de recursos pues tiene que incluirse toda la parte de los recursos humanos, ¿no? De los talentos humanos, buscando diversidad, equidad, y no solamente el tema de seguridad y salud en el trabajo, que eso está muy claro, por ejemplo, en el caso de Colombia con la legislación colombiana. Y en alcances y requisitos, incluir requisitos sociales explícitos, ¿no? Esos requisitos a veces no los consideramos porque creemos que eso no es relevante para establecer los requisitos iniciales de un proyecto y después establecer la arquitectura o el diseño más apropiado. Y en la ICB4 nos plantea algo muy interesante, que es desarrollar un plan de gestión de sostenibilidad eh, que sea como el mapa de ruta del proyecto, ¿no? Entonces, la idea es que ese plan ayude a orientar los impactos ambientales y sociales que pueda tener el proyecto, generando los indicadores correspondientes para poder controlarlos. Entonces, el resultado de esto es que no solamente se cumplen los objetivos de alcance, tiempo y costo, sino también el valor social y conceptos como el de valor social y ambiental neto positivo, ¿no? Que no afecte a la sociedad. Y hay otro concepto nuevo, y esta es una cosa interesante para aquellos que se están introduciendo en este tema, ahora con la ICB4 y la Dirección de Proyectos Sostenibles, incorporamos una nueva jerga, unos nuevos conceptos que antes no escuchábamos. Por ejemplo, el tema de la doble materialidad, el tema este de la aceptación social, ese es muy importante ahora en los proyectos que se tiene que considerar en los mismos, ¿no? Entonces, en estos planes de gestión de sostenibilidad de los proyectos que nos plantea la ICB4, pues tenemos que cuidar en las diferentes áreas de competencia. Recuerden que para IMA hay 3 áreas de competencia que debe de dominar el director de proyecto: perspectiva, persona y práctica, y tiene que desarrollar aspectos clave para ver el tema social, ¿no? La alineación estratégica en la parte de perspectiva, la definición de las políticas de sostenibilidad, incluir una amplia matriz de interesados con estrategias de comunicación inclusiva, y aquí pone el acento en gestionar apropiadamente las expectativas sociales y asegurar la LSO o aceptación o licencia social del proyecto, ¿no? Entonces, requiere ahora el director del proyecto es un liderazgo sostenible, ¿no? Traducir los objetivos de sostenibilidad en requisitos y entregables específicos, considerando estos aspectos sociales de contratación, trabajo digno, derechos humanos, etcétera, ¿no? Y obviamente gestionarlos con los indicadores apropiados y establecer y recopilar toda la información para poder difundirla y garantizar la transparencia de la información. Recuerden ustedes que las empresas tienen dos formas de obtener sus beneficios, sus operaciones y sus proyectos. Entonces, todo lo que aplica ahora para la organización aplica para los proyectos, como bien nos actualizaba Silvana y Lorenzo. Esta aceptación social es muy importante y relevante ahora en los nuevos conceptos que nos plantean los criterios ESG en la dirección de proyectos sostenibles. Entonces, es esa búsqueda de aceptación, de confianza, de credibilidad que debemos de contar con las partes interesadas, ¿no? De hecho, ya hay hasta niveles de medición de esas aceptaciones, ¿no? Si hay rechazo, si hay tolerancia, si hay legitimidad, si hay una colaboración o correspondencia en los logros y una
Recording in progress.
I'm also going to put this in. There we go. There we go. Okay. This is another indicator, the MACD chart. And again, this is basically when you take when a shorter term moving average breaks below a longer term moving average, it's negative. And when that shorter term moving average breaks above the longer term one, it's positive. Well, it's broken to the downside. But more importantly, and also, you can see that it's broken its trend line, its 2-month trend line. So this is a concern. Is there going to be less liquidity in the system, even though the Fed's cutting rates? If this happens, you're like, what's he talking about? I'm telling you. You think it's a coincidence that this is the dollar versus the yen? Okay, the yen got stronger and the dollar got weaker versus the yen. That carry trade had to be unwound. It's no surprise that we had a 17% correction in the stock market and a 20% drop in the Nasdaq. Okay, the S&P 17, Nasdaq 20. Right? And it's come all the way back. What has the market done since then? It's gone right back because this carry trade. When a market is really expensive, as it is today, you need steroids. You need that excess liquidity to hold it up and to push it higher. If that starts to disappear, that's why we're watching this very, very closely right now. So these, again, are the things that we're looking at in a ridiculously closely, in a very, very close way. Now, let's just go to a couple of these. I've been rambling on here. I'm sorry, Rodrigo, but
no worries, no worries. Just want to go over a couple of questions from the chat here.
Sure.
A few housekeeping items here, and then we can get into the macro. I know there's also other tickers and things we're going to cover here, right? So
absolutely, yeah. I'll go over just one or two more issues on the macro on just because I want to show the S&P.
Yeah.
And then we'll go over tickers and stuff, and we'll be on our way. By the way, what's I just see your hat. Is there something going on at LSU? I'm not something.
Yeah, so they just got a new head coach from Ole Miss, so we're
look at that. Boy, I'd coach them for half that money.
Yeah, things are looking better finally there.
Anyway, I interrupted you. Sorry, bud.
No worries, guys. So listen, I put this in the chat, but I'm still getting questions about it. We're gonna go over it real quick. So very specific, guys. Matt mainly is only buying calls and puts. Matt's not doing spreads, iron condors, butterflies. These are very straightforward. It's where people that are starting to trade options, it's where they begin, right? Because it's the basically level 1 type stuff, buying a call or buying a put. The holding periods for these trades are going to be 1 to 3 days. So these are not day trades. So even if you're under the PDT rule, you can still do them. And what people do, if you're not trading options yet, people just trade the shares instead. Now, Michael is asking, how much do I need to make these trades? So the trades are 10 to 20 cents, comes out to $10 or $20, and you can buy several contracts, right? So, but of course, never go all in, never put half of your money on one of these trades. It's, yes, Matt, we can make 1,600% in one trade. That doesn't mean the next one's going to be 1,600%. So you always have to be I guess responsible, right? About that, right? So
Absolutely. I never do a trade more than 10% of my trading portfolio. And I've done it like 3 or 4 times in my life. I haven't done it in years. And in all three or four, all those instances, it was like 11%. It's just these people who blow up their whole account on 3 trades. It's like, poof, that's not what we're here for. We want to help people make money. We're not promising that we're going to make them millionaires by next summer.
yeah, there's no shortage of trades, and that's it, people want to get rich overnight, and that mentality is kind of, you have to think about the long game, right? This is not a casino where you just come in and go out, right? So, all right, and next one here. Does Matt provide entries and exits? Kelly, great question. So yes, Matt will provide you a clear entry, clear exit on every trade. I'm going to show you how to do that later, but you get the alerts on your phone via push notification on the mobile app. So you don't have to be in front of the screen. More than half of the members have full-time jobs. So that's not a requirement. You don't need a massive account, and you don't need to quit your job. Next question here. No, these are not day trades. Michael, the meeting is on Tuesday. The video conference call is Tuesday at 11 a.m. Eastern. It's recorded if you miss it. And the chat room's open. That's pretty much 24/7. We have members pretty much around the world, right? So it doesn't matter. You can do these trades from any brokerage, any country, really. The next one here is, are these okay? So Matt is trading individual stocks. ETF. So the majority of the trades are going to be macro trades, whether it's the TQs or the SQs, and then you're also going to have other individual stock trades, commodities, even international, like even the yen, like Matt is talking about. There was a trade with the Japanese yen, and you didn't need to open an account on a forex uh, place where you could do this all with the stock market with options. There's also bonds, right, with the TLT, commodities like the GDX and silver, even international stocks, ETFs like the FXI, the Chinese, which Matt's going to review later. So, and again, all these trades, you don't need a massive account for them. So, Jeremy, that is correct. It's 1,800 for the year, but the Black Friday deal is 799 for the year. You can still get that. It's in the Zoom chat. One very important thing to cover here, lastly, if you use the checkout, it's 799 for the year, but it renews at about 1997. If you call me and I process it manually, it will renew at the same price. Just know that ahead of time. So if you want to save money, call me. We process it so that it renews at the same price. Now, Matt, anything that you want to add here? Oh, Kelly's asking, is this mostly trades or is this educational? And what type of education?
Yeah, I mean, we try to make it very educational, and it's not only all trades at all. And we explain things again. That Tuesday meeting has been vital for that. But we explain things in the chat room as well. But like I said, there's just so much that goes on in the marketplace. It doesn't necessarily make intuitive sense. And it's like what I'm going to show you in a few minutes. But it's like the interest rates, they have to go down, right? The Fed's going to cut. Well, yeah, short-term interest rates have to go down, but long-term interest rates don't. And we're setting up for what might be a contrarian trade. So that's so very important, is that educational aspect of it, so that so you can know whether you want to do it, and you can see some of your own ideas. I can't, believe me, I'm not the only one giving ideas. There are people in the chat room all the time saying, "Hey, what do you think of this? What do you think of that?" We've had many great trades, the ones that made over 1,000% that were not my idea, it was somebody else's. And that's what we're there. I mean, we're there helping each other all day long. It's a great community. We joke around every once in a while and with each other and have fun with it. But it's obviously very serious. We're there to make money. So, but it's a great community. But yeah, I mean, the whole idea here is to help people understand what's going on, not just I'll just follow these trades. I'll just say no, understand what we're doing, how trading really works, and how the fundamental aspect, because we absolutely take those fundamental aspects. They're very important. But you take some of the momentum and that technical analysis. You take positioning. Like I said, when too many people on one side of the boat, it has to go the other way. There's nobody left to take it, higher. Or if it's everybody's bearish, nobody left to take it lower. And we take sentiment readings, all sorts of different things that really come into play that have helped us to get. The whole idea is get things at the key turning points in the marketplace, whether it be an individual stock, a group, which will get involved in ETFs, a market, or even an asset class. So it's and again, same thing. Like I always said earlier, is that we're not here to try to make $500 million in a month. We're to make. We're not trying to guess on anything. We're trying to make intelligent decisions based on all these different areas coming together and bringing my 40 years experience and what other people have also have a lot of years of experience trading and some of these little what do you say indicators that can help us on that mission.
Right. No, definitely. I mean, it's a great community. That's something. I mean, we've been doing this for 5 years now, Matt. There's people that have been there with us all that time. I remember when we started it, there's just you and me there, and now there's thousands of people in there, and the amount of people that this has helped, I don't even know how many, but a lot. So, all right, I got a quick question here for you. We've had some recent numbers with the jobs that came out, and um, low hire, low fire is what they're saying, but they did all the firing last month, and they're saying that the unemployment claims came a little bit lower. But one thing I started reading up is that there are many states that give you a limit on how many months you can claim unemployment. So that drop, we don't know if it was just because people were maxed out of claiming unemployment. The job market is one thing. We've been covering this obviously 5 years, but more recently with a bit more attention. Where do you stand with the job market right now?
Yeah, it's funny. I just wanted to grab my notebook because I still write things down by hand. Sometimes it's funny. The best thing I ever did, I was a joke. I'm 100 years old, but I took typing when I was in ninth grade as an elective, so I used to type paper. Back in the old days, you had to type your own papers on an old typewriter, and that's what I did for. I would type papers at 50 cents a page, and because nobody else knew how to type, it was great. But anyway. This I wrote this down here. Is it's because the Christmas Challenger in Gray, which is a Christmas just happens to be the name of a guy. It has nothing to do with the holiday. And but they do this monthly, this monthly survey of the employment. That's one of the things. We had the jobless claims, as you mentioned, lower than expected, but the number of layoffs actually was smaller. And their point was that actually, and I wrote it down, the actual quote says, layoff plans fell last month. Certainly a positive sign. That said, job cuts in November, which have risen above 70,000, that's only happened twice since 2008. That was in 2022 and 2008. Okay, we know what happened in 2008. In 2022, even though we didn't have a recession, the stock market went down 25%. So things did weaken. So this is, again, I'm not trying to call it a catastrophe. The employment picture is still okay, but it's only okay and it's definitely deteriorating. Even the biggest bulls admit that. In fact, that's one of the reasons I say the Fed's got to cut rates, right? It's like, if things were so good, why would they have to cut interest rates? So, of course, the whole thing with AI. I mean, I've said this before in the past. I have some people I know in real estate, residential real estate in Silicon Valley, some of these other areas. These people are scared to death. And I'm not talking, they're all talking about we have this K-shaped recovery where the haves are really doing well and the have-nots are really doing poorly. Well, guess what? There are people making big money. I mean, multiple six figures, over $500,000, many over $1 million a year. These tech companies who are scared to death they're going to get replaced by AI in the next 12 months. And nobody's buying these big houses anymore. I mean, yeah, sure, the heads of the companies are making, billions of dollars. They don't have to worry about getting laid off. They're still doing it. But, this AI thing, I mean, that's what people say, is it going to be really good? Well, that's how good is that if people are going to get laid off? Because or if it's not going to work, that means the market is much too expensive for what's going on. So it's a real dicey situation. So the employment picture is an interesting one. Now, one of the things that we were talking about was this, how I said how this week's been kind of quiet. But what we have, this is so important. I think, oops, sorry. Yeah, sorry. Okay, this is just the S&P 500, okay? And everybody was talking, and rightfully so, talking about the 50-day moving average. Let me get rid of some of these lines. There's too many lines on here. Okay, now let's even get rid of the RSI. Okay. Here we are. That's the 50-day moving average. Well, we got down to the October lows. And everybody, again, correctly was saying, if we break below those October lows, that orange line, let me draw it in here. Let me blow it up so you can see it better. There we go, and I'll get rid of that. And we got right down to it. Actually, I drew the line a little low, but you can see we got right down to October lows and bounced. That's very positive. We regained that 50-day moving average, yellow line. That's very positive. Okay, but you see how we've been in this tight range here it's at the upper end of that range, which is good. But that the rally has lost some steam. What does that mean? Well, we're not sure yet. Does that mean it's just run out of gas and this is what they call a dead cat bounce? And it's just going to roll back over. All it did was work off the oversold condition. It's going to roll back over, or is it going to break out and make a new high? That's why the next week is going to be ridiculously important. We have the Fed meeting. We have what's going on in Japan. We have, I mean, I'm telling you, even though this week has been a little more calm, it ain't going to stay that way. It never stays that way in the last quarter. I'm sorry, in the last month of the year anyway. And I'll tell you why in a second. But this is what we're waiting for. It's bumping up against the top of that sideways range that we've been in since since the day before or the day after. I have to do that. The day after Thanksgiving, which you can see here. Just kind of, well, see, we're kind of in this range. Well, and we're trying to break out of it, but we're not quite there yet. So we got to wait for that to happen. See what happens next. Now, and just to go back to your question on the economy. So I guess my point is, even though I'm worried about the economy, that's going to be next year's issue. I'm telling you, next year is going to be. I'm convinced it's going to be the best year we've ever had because
it could be the pop. Do you think next year? So by the way, real quick, and also with the job stuff, there's a lot of seasonal hiring as well. Those are not permanent jobs,
right?
As well. So that's why I really don't trust these numbers coming out. But I was seeing also that it was small business mostly that was hurting. Which it's
that's who fires most of the people.
So do you think that 2026 is going to be the year when the bubble pops, or will the bubble keep bubbling?
Yes, to answer your question. And I just say that again, I just want to admit, if this thing can break out to the upside, so if it breaks out to the upside and the markets start to melt up like people are thinking, that can happen. That's why we're going to stay very, very nimble here near term. Nothing for next year. Nothing. Okay? Because wait a minute. If all these institutional guys care about the long term and they're going to start selling if they're worried that things are really going to break down next year. No, they're not. You know why? Because as much as they say they're long-term oriented, and believe me, they won't necessarily admit it, but they've told me this because I talk to them all the time. They become short-term oriented at the end of the year. If the market's running, they have to be in the market, period. If they think the market is going to crash starting January 3rd or 4th or 5th, it doesn't matter. They're not going to start selling now. Because first of all, it might not crash. They don't know for sure. Number one. Number two, they get paid on an annual basis. Okay. If they were up 25% 2 years ago, they're up 25% last year. They're up 15% this year. They're doing really well. Okay. You and I have done really well the last 3 years. Guess what? If we miss a move at the end of the year, what are we going to do? We can't fire ourselves. It's like, oh, well, guy, you idiot. Punch ourselves in the chest and say, you're an idiot for not staying in there, but we're not going to fire ourselves. Those guys will be fired, not fired from their jobs necessarily. But it's like, even if they're up 15%, if the market's up 22%, people are going to pull the money out of the fund and put it into another fund that was up. Why would you do that? I was up 25% last year, 25 the year before that, 15 this year. Yeah, but Susan who runs this other fund was up 25% all 3 years, and you missed the last rally. They are measured on a year-to-year basis. Even the ones whose fiscal years start at a different time, doesn't matter. They are measured by their customers, by the public, on an annual basis. And if the market's rallying, they got to be there. That's called performance fear. There's fear of missing out, where people are like worried about, oh gosh, I'm missing a rally here. Well, that's one thing. Performance fear at the end of the year is a very important thing. So we could have that rally. But going back to what you're saying, what you're asking, Rodrigo. Do I think it's the AI bubble? I think it will. I think we're going to see it burst. again, bursting the bubble. They said, well, it's nowhere near the bubble it was back in 2000. So what? It has to be the biggest bubble of all time for it to burst. And when you say, I mean, you could believe me. There's some reasons to say that this is not a bubble and the market's not going to go down. I don't agree with those, but at least I can understand there are certain arguments. But you can't just say, it's not as big as 2000, so there's nothing to worry about. All you're saying by saying that the market's it's not as big as a bubble as it was 25 years ago is that the market's not going to go down 80% like it did back then. The NASDAQ went down 80%. Okay. So what? I mean, it's like, if it's going to go down 30% in 2 years, do I want to be fully invested in it? Or do I want to be trading and taking advantage, buying puts and making these good plays where I can, I can make money in the decline. We made really good money in 2022. The market went down 25%.
Yeah, that was the best year of the chart, I think.
Yeah. I mean, it's like, so because everybody else was caught off sides and we weren't. And so again, you don't have to be calling for the end of the world, which some people are. They're thinking, oh my God, this is going to be a major bubble. It's going to be horrible. You don't have to be calling for that to say next year could be tough. It may not start on January 2nd, and it may not start for a couple. I mean, in 2000, it didn't start for several months. But
right.
The point is that it's becoming more and more evident, and I would say now even somewhat obvious, that the AI phenomenon is not going to be as profitable as people have been hoping because of those costs. It's just you have to buy new chips. It doesn't matter if your chips are still, our chips are still fine. They're working fine. Great, but they're slower than the ones from 2 years ago. You got to buy new ones. And so they buy more. And you got these data centers. And now they're taking on debt to buy these things. I think it's now, and people say, well, don't worry, they'll rotate. They'll just rotate out of tech and into these other groups. That sounds great. But if the tech stocks start going down, the market goes down because they're 35% of the S&P and 60%, over 60% of the NASDAQ 100. Okay. Now you say, oh, wait a minute. I thought it was 40%. Well, the Mag 7 are 40%. Either way, it's still huge. But tech overall is over 60% of the NDX 100. If they go down, those indexes go down. And guess what happens when those indexes go down? Especially after people have been sitting hearing about bubbles for 6 months, they're going to start pulling money out of the market. Now, just say they just go, hey, I'm going to raise 10% cash. You multiply that by 100 million people, suddenly that's money coming out. So if the tech stocks go down, if they just kind of drift sideways, yes, you can see a rotation. That's what we've been seeing lately. Okay, that can't last. If the tech group goes down, the market goes down, and if those major indexes go down, people pull their money out. And the thing is, if it was a cheap market or even a fairly valued market, you'd say that's okay because the underlying fundamentals will still support it. That's not the case right now. We are living on speculation, leverage, and liquidity. And like I said, that liquidity becomes less plentiful because people are starting to worry about budget deficits and the yen goes down and all these other issues. It's not for certain. So we need to be very, very careful. And we need to be careful starting next week, because if we get a sell the news reaction on the Fed, because that's exactly what happened. Here, let's look at this. I'll show you right now. Okay. Here, just look at it. We'll just get rid of this stuff. All this stuff. So you don't have to see it. I'll just, very simple. This is just the S&P 500. What happened when, oops, there we go. Let's get rid of that. Okay. Here is, okay. Right here. Yeah. Okay. That's the week. Okay. So okay, here we go. Okay. It actually here. Okay. So here we go into the Fed meeting. It was right here, right at the end of October 25th, right? 28th, right in here. They rallied in because everybody thought the Fed was going to cut rates, right? And then what happened? Boom. Little bounce, boom. Okay. What happened this time? We suddenly found out, oh, the Fed is going to cut. It went from 20%. This was when they came in, when the New York Fed president came in on the 20th, the 20th and 21st of November. And he said, I think we're going to have a Fed cut. We were down to 20% chance that the Fed would cut rates in December. After he said that, it jumped to 70%, and a couple of days later it was 90%. Look what the market did. So we've already priced it in, just like we already priced it in here. And then when we got the news, that's what they call it. It's not just sell the news. It's actually part of a saying that goes, buy the rumor, sell the news. So you buy the rumor that they're going to cut rates. And then when it finally hits, you say, well, okay, it's already priced in, sell. And that's what definitely happened there. I'm not saying it's definitely going to happen this time, but we're seeing a very similar situation. If we get that, this stuff that I'm talking about that will happen next year could start next week. And that's why we want to stay very, very, very nimble. This is going to be a really exciting time. I'm telling you that tomorrow, Monday, I think we'll be very active. Next Tuesday, unless something else happens, we'll probably be sitting on our hands, and that's okay because we want to wait for what the Fed does and see how the market reacts to it. And we'll see a bunch of moves. Just every time it moves up, everybody, oh, it's good, and then 10 minutes later it goes down. Oh, that's bad. It's like it's ridiculous, and we just stay calm, have our positions ready, and we pounce, and that's what we're going to do next week. I'm telling you, we're going to have. You look back at every single Fed meeting, some that are really big, some that aren't so big. This was like everybody knew they were going to cut interest rates. So it's going to be a non-event. And look what the market did. It's got the next 2 weeks going down. So we got some exciting stuff on
plenty
on
of
the horizon
here. Matt, so there's a couple of points here about AI that I want to get your take on. So the first one is, I don't know if you heard the IBM CEO was talking about, data centers and AI not being profitable, that we're overbuilding. Then you had the news about Google doing their own chips and being better than OpenAI, when OpenAI, I think it's about 40 billion in revenue, they say, but they have 1.4 trillion in commitments. So just by that, seeing that Google is able to beat them at their own game without 1.4 trillion in commitment, does that kind of signal you that there has been overspending? I mean, maybe it's a rhetorical question. Maybe the clear is yes, but do you think the writing's on the wall that there's been overcommitment or overspending on this right now?
How is OpenAI going to be able to compete when they don't have any? Well, they have revenues, I should say, but when they don't have profits to just spend, like Google has, right? They can just price it. I mean, I'm just antitrust and things, but they can just price it at a level where they're not making money on AI until they put OpenAI out of business, right? Because they make money at all these other things. And I don't. I mean, it sounds a little harsh, but that's what it is. But I mean, you look at what happened in the .com bubble. Okay, who came out of that on when it came to the .com selling? Amazon, huge winner. Almost everybody else lost, right? And we had, we had these, and again, I like to I'll tell you these notes. It's like you had these, no, the same thing. On the internet, you had. Let me just look at my notes here because I like to write this stuff down. Oh yeah, I said so. The search engine, who won? Google won, right? What happened to AOL? Remember AOL.com, Netscape? What the hell happened with it, right? Somebody's going to win. Google's going to win. Okay, OpenAI is going to have a very, very tough time. And look at what happened in that interview he took. And he's like, the CEO. Again, he's a brilliant guy. I'm not trying to put him down. And I hope I'm wrong. I hope OpenAI does really, really well. Right? I'm just saying it's going to be very difficult for them to do it. I'm not a internet analyst, but but I study this stuff closely. And it's the same thing. Again, you go back to social media. Facebook won. On search it was Google. On the when it came to with the commerce, e-commerce, it was I'm sorry, but we all know it was Amazon, right? Those are the big winners. Everybody else lost. There's not enough money out there. And the thing is, these AI things keep competing with each other. Are you going to need 7 of these? You're going to need 1, right? You're going to find the best one. You're going to use that, or the cheapest one, or the best one that's still cost effective. And Google's going to be able to handle that. Google's going to be able to. Google is going to be able to provide that at a loss. OpenAI can't do that because they're taking on all this debt, right? It's kind of easy math. I don't want to overstate it. Again, this is some of the stuff because I took those notes and I want to attribute it to Dan Niles, who runs a fund. He used to be the internet analyst at Goldman Sachs, and he's a very smart guy. And he's not always right. He's not perfect, but he's a very smart guy, done very well. And these are some of the things he was. I mean, it's something that I've been talking about for a long time, but he said it very succinctly, and I wrote it right down really quickly when he said it. It's just that we got to look at this realistically, and I think investors are now. I think that Michael Burry is the person who's got people listening to this and understanding it. It's funny. Michael Burry, if you ever seen the movie or read the book The Big Short, or seen the movie, brilliant man. And so you think, well, sometimes those people are so brilliant that they can't convey their thoughts to mere mortals like the rest of us. Well, I've never met the man, but the stuff he's been presenting lately makes a lot of sense, and it's concerning. And you always worry when a guy makes a really good call and makes a lot of money on one thing, and then you assume, well, he's going to make 5 more calls and they're all going to be perfect. And frequently they make the one big call and then they make a number of other big calls and they're wrong. Well, he hasn't made any other big calls. He did actually a couple of years ago. He sent some things, some negative stuff that didn't work. But it's funny how it's been 25 years. Oh, sorry, 15 years since he made that first call, and now he's making another one. Where usually somebody else comes out 3 years later and says, "Oh, I can call every top." It's not what he's doing. He's just telling you the facts. And boy, people are listening, and that's got me very worried that expectation that the boy cried wolf, people are finally gone. This AI thing is not going to be. I'm really worried now. They keep telling us this was going to get profitable, and it's not happening. So
right, and
now,
I mean,
now, boy, I listen to that stuff, and that's what makes sense to me, not what all the bulls are saying.
So as of now, ChatGPT it's just a chatbot and makes funny videos. So I thought it was going to be a lot more than that, but I mean, and also let's say to help businesses with this agentic AI, but if that works out, that would replace a big chunk of the workforce, which now you're left with another problem.
That is exactly true, and it was funny because there was a customer of mine sent me an article, and I can't remember who wrote it, so I don't want to. But it was saying, and I've been saying this for a long time, but he sent it to me because he said, "Matt, this is exactly what you've been saying," and it was just talking about it's for the economy. I mean, it's listen to what Elon Musk said. He was in his interview, and he's sitting there, and he's with what's his name, Jensen from NVIDIA, one of those big conferences, and he said, I look at this that people are just going to choose to work or not work. They don't have to work. Well, that sounds good, but it's like you're going to have a minimum income. That's great, but it's not like you're going to choose to work. But it's not like you're going to go. Yeah, we're going to give you $500,000. We're going to give everybody $500,000 that can work if they want to make more than that. It's not, you're going to have a minimum thing, and you're not going to be working, and you're going to be you can go fishing, but if you don't have money to do any of that extra stuff, what the hell are you going to do? That's not good. Okay, and so if people aren't employed, plus it's not good for human nature. It's just not good for that. But the point is, we have to say, is it going to change the world? Great. How profitable is it going to be? And I am not putting down OpenAI at all. What they're doing is great, but it doesn't look like their path to the kind of major profits. I mean, that CEO, if you saw that interview, he was being interviewed by Mr. Gerstner, I think, and he was like, "Hey, you don't like it, sell your stock. I got people who can buy your stock." He wouldn't answer the question. He was like all flustered. And then 3 days, and then a week later, he comes out and says, "Code red. We got to go beat Google."
So when they
what you need to hear.
When that happened, and then he said, "We're gonna have to postpone the marketing and the ads, which is what was gonna make them revenue. They're postponing that because they want to make ChatGPT better." So, I mean, it just seems like there's finally cracks showing, Matt, in the story.
Exactly. They've been out there, but now they're getting more. They've been out there, but they're like, yeah, but everything still seems people. And it was a month ago. I mean, in the middle of October, people were still saying yeah, but everybody's spending, so it's still going to be great. It's like, what good is your spending if you're not going to make any money on it? And if you're going to have to keep on spending just to keep up, not to make any profits, just to keep up, why is that good? And again, if the stock market was trading and these stocks were trading at fair value, the stock market was trading at 17 times earnings or 18 times earnings, I'd be like saying, no problem. There's no problem there. So we're not going to get the big move that we were hoping for, but we're still going to be fine. But we're not. We're trading at 23 times earnings or 22 to 23 times earnings. And even though earnings are starting to improve a little bit, they're not proving anywhere near enough to justify today's stock market. So it's a real concern for me next year. And when you combine that with what's going on with these budgets in other parts of the world, it just tells me that's why I'm thinking hard assets. That's why I'm thinking not just gold and silver, but other hard assets that work very well. Again, maybe because I'm so old, I remember the 1970s. I mean, I was just a kid, but I do remember it. I remember sitting in those lines for gasoline with my mother, and we would have to sit there for half an hour just to get in. Well, sometimes an hour just to get half a tank of gasoline, and you could only do it on certain days of the week. It was, and those hard assets did very well in that time, and it's definitely a different time. But on one hand, maybe remembering that is keeping me from seeing what the possibilities can be. But I remember 1987. I remember the great financial crisis. I remember 2000 to 2003, and it's never different this time. And maybe it doesn't happen for a while, and that's why we stay nimble. And that's why, boy, if this market breaks out in the next couple of days, we're going with it. We're going to let it run, and we're going to play the bullish side of the scenario through the end of the year. Then we'll rethink it. Well, we take the market as it comes to us. But right now, there's just, we've been living on steroids for a while. I'll tell you another thing. I mean, a big part of this rally is because of it's not just because of AI. Okay, I don't want to keep boring people, but this is important. So it's kind of a long thing, but I'll cut it down. In the 1990s, okay, everybody said it was this crazy boom. Everybody, the new economy and the internet was going to change everything. Well, guess what? It did change everything. But it was also helped by this massive level of liquidity that was pushed into the marketplace. And what are you talking about? There was no QE programs. And it was all behind the scenes. The Fed and all the other global central banks flooded the system with money for years. Why did they do that? We weren't in any serious trouble. We were, because we had the Y2K issue, year 2000, Y2K. And what the hell was that? And I've talked about this in the past, so I'm sorry if I'm being repetitive to people who've been here before. But every computer in the world thought that the number 99 in the year was 1999, that the number 86 was 1986, right? Number 91 was 1991. It's thought that the number 2000, the number 00 was 1900. So people suddenly went there and went in the early 1990s and said, oh my God, all of the computers in the world are going to think it's going to be January 1st, 1900, not January 1st, 2000. There's a reason now why when you fill out, and when I was a kid, it was, you put in your birth date, you'd put, let's say you're born in 1980, you would say 051280. Right? Now everybody, they always make you do the full year. And now you put in 1980, okay, or 2005. It's the full four numbers because they don't want to go through that again, even though it's 100 years from now, okay? 00, every computer would have crashed because you know what? Every bank account would have said, yep, you have as much money in the account as you had in 1990. I'm sorry, 1900. 1900, which most people weren't alive in 1900. So I don't know if they were alive, they didn't have much money in the bank, okay? And so they had to spend billions of dollars fixing it. And there are people in the chat room who verify this. Well, I saw it because I saw what was going on. I lived it, right? But there were people in the chat room who said, yeah, I was working for this technology company, and that's what we did. We spent millions fixing our computers. And so it's no coincidence that the bubble topped out right at the beginning of 2000. As soon as they realized, and they had to let it go for a couple of weeks, let's make sure this 00 thing's going to work, that the 00 does read 2000, not 1900. And then they said, okay, we don't need liquidity. They pulled the plug and the market went straight down. Okay. Why? Because all these stocks were way too overvalued. The economy had a very mild recession back then, right? George Bush got reelected 4 years later because the recession was very mild. It came back out of it. He got reelected. All right. It was that's a similar thing because the reason was that yes, AI did take the market higher. I'm sorry, the .com did take the market higher, but this liquidity thing juiced it even more and took it way higher. And so as soon as that liquidity was taken away, down it came. Same thing happened in 2020, pandemic, massive amounts of QE. They pulled it. They go, wait a minute. Well, they stopped doing QE. They haven't done QE since. Actually, that's not true. In the spring of 2022, I'm sorry, the spring of 2023, we had the bank crisis. Remember all those the regional banking crisis out in the West Coast, and they had a major run on these banks. The Fed did QE. They didn't announce a program, but you look at their balance sheet; it spiked up in a major way. Right? That was QE. That was happening just as the AI thing was taking off. So yes, AI did change, and NVIDIA has made a boatload of money. Taiwan Semiconductor has made a boatload of money. Advanced Micro Devices, these companies have done very well, right? Nobody else has. Nobody else is making money from this, right? But the liquidity, the big liquidity injection that lasted for over a year made it seem like it was there. So then we've had other liquidity injections, and so it's just, we need to be careful about these valuation levels. People, and there's a person on TV drive me crazy. It's like saying, well, the valuation of the last 5 years is average has been over 20. So that's the new normal. That's the new fair value. It's like, no, they always say that in a bubble, and they're always wrong. Okay. And maybe it should be a little bit higher for some reason, technology is made a little bit higher, but again, in 2000, we had the biggest QE programs ever. Okay. And then we had it again in 2023, and we actually had one this year as well. And again, because of this repo issue that we had a couple months ago. So, and again, the Fed knows this, and they say we can't let this go on forever. When they cut rates in when they start raising rates in 2022, is because they had cut them to zero. You can't leave rates at zero. The economy doesn't work on zero interest rates. You need to be able to banks can't survive on zero interest rates. They don't make any money, right? So, they need to know. That's why they normalize interest rates, and they were just, we'll normalize interest rates. The interest rates will go up, and sure enough, they knew the stock market was going to go down. They knew it. They all sold beforehand. And that's a whole nother thing. Some of them had to.
They used to be able to trade some stuff there.
Yeah, that was a little dicey.
So basically,
just a lot of stuff going on, and I just think that we got to be careful about just assuming that the AI stocks deserve to be up here. They did deserve to move up a lot higher, but I think the liquidity issue played a bigger role in moving into such exorbitant levels. And so when they come down, they're going to fall further than people realize.
Right, and this is something. So you've been through, recessions, depressions. No, not.
No, never been through it. I'm not that old, but and again, it was funny. My parents both lived through the Depression as young children, or as young kids. Now, both of their fathers had jobs during, so they never struggled, but they saw other people struggle, and they told me about it. But not that I didn't live through that, so I have no idea. But I just know that I'm very much of a student of history, and it boggles my mind that people could see what happened. People who are my age, or even 10 years younger, 15 years younger, they lived through the .com bubble bursting. They lived through the great financial crisis. They lived through the pandemic, and yet they just say, "Oh, market can't go down, can't go back down to 17 times earnings, which would be a 25-30% decline. That can't happen." It's like, how could you think that when it's happened so many times in just the last 25 years? As again, I could definitely be wrong. Maybe it doesn't happen for another year or two.
Right.
It looks like it's coming sooner rather than later. And they say, "Oh, but President Trump will do this." And I go, maybe, but the markets are bigger than any person. Believe it, the markets are bigger than the Fed. They're bigger than any person. So we need to be very, very nimble next year. It's going to be a lot of fun. It's going to be a lot of fun. And again, if it keeps on going for a while, we'll play it that way. It may go for 6 months. It may go all year next year. Maybe 2027 before things get dicey. Who knows? We'll see.
Yeah, the funny thing is that they're only asking Jensen Huang and Lisa Su if there's a bubble. Like they're like of course they're going to want to pop their stock, and like that is their job, you know.
And not only that, what I mean. If he says, "Yep, we're in a bubble and you should sell everything,"
It crashes everything.
they would get death threats. They would get serious death threats because it would become a self-fulfilling prophecy. It's
Right.
remember, when was the last time the Fed told us that we were headed for recession before recession? That would be never. And Secretary Bessent, I mean, he came out a week ago and widely reported that we're not going to have a recession. I don't think we're going to have a recession in 2026. Okay. I was like, great. I have huge respect for him, huge respect for him. But again, the last time a Treasury Secretary predicted a recession before we were already in one would be never. That is never. They don't, again, it would become self-fulfilling prophecies. If the Fed chairman came out and said, we're going to have a recession, people would just pull on their horns and stop buying. And I mean, could you imagine? So again, you can't listen to them when they say this stuff. That's, again, some people say, oh, they're paid to be bullish. These guys don't, they can't say that. Warren Buffett cannot, first of all, because they know they could be wrong and they'll look really bad if that happens. But Warren Buffett cannot come out and say something like that because it would just be, but he's saying it with his record levels of cash.
Right.
200 and whatever that, I forget the number now. 260, is it 360? I should know that right off the top of my head. But I mean, he's got record levels of cash because he's going to take. Warren Buffett did not become rich, become a gazillionaire, multi-billionaire by buying expensive stocks and watching them go higher. He bought them when by having a lot of cash on hand when what hit the fan, and he bought stuff at cheap. Because remember, when things do hit the fan and when the market's leveraged, and it is leveraged today, the margin debt is at all-time highs. Okay, then they get what's called, then they get forced selling, margin calls. And so when the thing gets to fair value, people are getting margin calls, and the broker calls and said, "Well, we're selling your stock." No, don't sell your stock. It's cheap. It's cheap. It doesn't matter. You bought it on margin. We have the right to sell your stock at the market until we get the money that you owe us. Click. That's it. There's no question. They just sell the stock. Forced selling, margin calls. The trading places, margin call, du boys. And that's when the opportunities, that's when he comes swooping in and buys things. I mean, during the great financial crisis, he got Goldman Sachs, he got to pay them 10% dividend on preferred stock. So he got this huge return. And when interest rates were at zero, he was getting 10% of his money from Goldman Sachs. Oh my gosh, how smart was that? I mean, he became a brilliant guy. He didn't become a billionaire by being stupid. And if you think the market's going to keep going up to a much bigger bubble, then you're basically saying Warren Buffett's stupid and be sitting on all that cash. I just don't.
Matt, so look, like CNBC, all these places, they've been putting glitter all over this, and it's one thing to know the macro like you do and lived it and trade through it, and then a journalist who is reading off a teleprompter and there's a producer telling him what to say, what not to say. One of the things that people value the most about your analysis is the unbiased side of things, where you just call it as it is. So with that in mind, what are the top concerns that you feel the market is just not taking a look at or is not even being talked about?
Well, I mean, it's I just kind of discussed them with those things, the liquidity issue and how that's played such an important role. And, again, we don't have to have, it's like steroids. You have to have it's always got to be there. If you take less steroids, you're going to be weaker. Okay. And again, that may, and so it's without the QE programs, without again, I'm not saying that liquidity is the only thing that has fired up this rally. It certainly hasn't been. AI is real. It's going to do very well for a small number of people, for a small number of companies. But that issue, the issue of the budgets taking place. And again, there's a reason why gold and silver are doing so well, because people are like, yeah, I'll ride this thing as long as I can, because I have to. I'm a professional investor, and I get my performances year to year, right? But I'm going to keep buying gold and silver because that'll protect me when the thing turns down. And all these central banks have been buying. Why don't they mention it very briefly here and there, but they've been buying. China's central bank's been buying there was a story that a major bank moved all of their gold traders to Singapore because they're worried that the New York and London are going to lose their place. I don't know if this is true. It's a rumor, but it's there's just a lot of stuff going on behind the scenes. And if you believe that the CME shut down because of they had their cooling system didn't work in their data center, that's a bunch of baloney. There's no way they didn't have a backup. Every in that yeah, for every market maker, every firm has several backup systems. It's just that was just there was something happened there. I don't know what the heck it is, but again, I don't want to get too conspiratorial and stuff. I'm just saying that this things are going on in the marketplace, and we just when markets are expensive, there's more risk. By definition, there's more risk when markets are as expensive as they are now. Valuations are a lousy timing tool, and that's why I keep saying I'm not betting the farm the market's going to go down in the next month because it may go. I'm thinking it actually will likely go up in the next month, but after that, I'll be waiting for the signs to tell us. But there's some stuff going on there, and we didn't even get a chance to look at some of these trades we should do.
Yeah. The trade from the inner circle from the chat room, by the way.
Yeah, here we go. Let me go here. Oh, this is my. Oops, I'm sorry. I meant to blow it up for you. Cool. So these are the trades that we've been doing just in this year. Not just the year, just in the last couple of months. And again, these QQQ we did there. SOSX, that's the semiconductor ETF. Okay, that's the leveraged ETF there. SQQQ, which is the leveraged ETF on the QQQ. Okay, S stands for short, so it's a negative play. But see, look at these here. SQQQ calls, SQQQ puts. Whichever way the market's going, we take what the market gives us. Okay, Palantir, 1,000% return. QQQ, 1,600% in just a couple of days. We don't day trade. Once in a while, something moves so much that we do sell it in a day. There are plenty of day traders in our chat room, and they're talking, giving us ideas all the time. I tend to keep away from that, but that's just because that's kind of our marching orders. But again, SLV, 750%. These are all just in the last month and a half, November and late October, right? And we're now in the first week of December. It's 300%, 400%. Another SLV. SLV puts, SLV calls. Whatever the market gives us, okay? And let's look at them a little bit. Okay, here was the SOXX trade, okay? Bought these here on the 19th of November, sold them up 200%. 3 days later, or a day and 3 calendar days later, but a day and a half time lapse, okay? Boom. November, okay? These were the QQQ puts. We bought them late on the 20th. I'm sorry, midday on the 20th. So we didn't get the high of the day. Some people would have gotten 1,800%, right? 1,600%. Now, this is one of these issues where we sold some up 100%, some up 400%, some up 800%, and some up 1,600%. Okay, so the average wasn't 1,600%, but if we'd only bought one, we would have sold it maybe up 200%, and we would watch this thing keep going. And the thing is, too, we could have gotten like 1,700%. If you make 1,600% on a trade, and you get mad at yourself and lose sleep because you didn't make 1,700, don't trade. You'll drive yourself nuts. Okay, here's another trade. So we like to show you the specifics, where we bought them, where we sold them, rather than just claim that we made these trades. I mean, the people in the chat room can verify that this is where we did the trade. This is the price. 400% SQQQ. That was just a couple. This was the $14 calls. I got to fix that, but it's not the $1 calls. It was the $14 calls. But on November 14th, Palantir. Okay, we bought these on November 12th, sold them at the very beginning, right at the opening. On the 14th, 2 days later, over 1,000% return. 1,000%. This is one where we sold most of them up here more of them up here because it jumped. I was like, I'm not gonna. We're up over 1,000%. We're not gonna get too cute. Let's just sell them. Okay. And again, but we showing more of these just to show you that we these big trades where we made multiple 3 figures and sometimes 4 figures are not just once in a blue moon. Again, all these trades were in November. Yeah, 100% there, doubled our money. That's not 700%, but you double your money in one day, not bad. Okay, 300% October. Okay, and again, we go on and on. Here's another one, and earlier in October, 400%. Again, on the puts this time. Marvell, look at how Marvell. We said stock's way up over 100 now. Okay, this is a stock that we liked on a breakout basis at the beginning of October. It's done very well. We did another one. AMD went up, ended up going 45%. It ended up going 75%. Okay, SLV again. These are more of trade. This is a trade we did way back in September. Look, here's just a great example of what we did. We bought these calls back in September. We'd already bought some in June. We made so much money on the calls, and silver has been beautiful. 600%. We bought them on back in August, sold a bunch of them on the 8th, up 600%. The next day on the 9th, we sold the rest of them up 750%. So now we're out. But I said, this thing's getting way out of control on a short-term basis. Let's buy some puts. So after making 750% on the trade, we turned around and bought the call, the puts. See how this, again, November 9th, this is when we sold them. Sorry, October 9th. See this? You can see down here where it says October. October 9th, we sold them. The next day, on the 9th, see this? We came in, we bought the puts. This was one where we did day trading. I was like, geez, we made 750%, turned around, took that money, and made 300% on that money. I'm not holding on to these. We got out of them. And of course, I'm glad we did, because even though they went higher for 20 minutes, they came back down. But again, this is what the market gave us. And just more trades from October. Again, they're not all in the multiple hundreds. Sometimes they're 70%. Western Digital, TNA. This is a one from the Russell 2000. That's an ETF from there. There's an individual stock open, 420%. Another silver trade, et cetera, et cetera. You can see we did a lot of silver trades, and it's worked very, very, very well for us. And there was another Palantir trade we did in August where we made 400%. So that just gives you an idea of what we do, how we do it. And I just want to show one last one here. Hold on, let me escape here. Hit this little escape button. Oops, hit it again. There we go. And I'll just go, because we like to show you the best trade we ever had. What happened to my notes here? Oh, there it is. Okay, yeah, okay. Here we go. Okay, bang. Okay, FXI, which is the ETF for Chinese stocks. Okay. And remember we talked about the RSI, how things get oversold? Look how incredibly oversold this thing got. This says last week's chart. Well, it was when I did the chart, so it wasn't last week. But this is when I took the picture of the chart. But it was the most oversold it ever been. This market was going down, down, down. People forget in 2021, China was clamping down on all these different industries. But this drop was because we, the US, came in and said, we're going to delist a bunch of your companies. And they're like, okay. It's one thing for us to knock down our market because we're trying to clamp down. But now the US is causing us to go down. So we came in, I said, this thing is the most oversold it's ever been. Most oversold reading I had seen in anything, okay? So we came in and we bought some calls because I knew that not only would the Chinese government do something, they would personally go in and buy stocks. And I knew they'd do it. Sure enough, boom, bounced back 20. This would be like the Dow Jones or the S&P bouncing 27% in a day. Okay, and that's what happened. And we bought the FXI March 18th, $30 calls. We sold half of them up almost 3,000%, the other half almost 8,000%. And I even told people, I think that China's going to keep buying their stocks. You can hold on to some if you want. I just said up 8,000%. I can't. I have a certain responsibility. I got to tell you to sell the rest. But if you want, go ahead and hold on to a flyer. Some people say they did. I can't take credit for it. Some people, one person said they made over 10,000%. Another person said they made 14,000%. I can't verify that. That's what they said. I can verify this. We definitely made these trades. Those are the returns we got. So again, I wish we could tell you that we do these kind of returns all the time, but literally, right before Thanksgiving, in 2 different weeks, we made over 1,000% on 2 different trades. So again, we're not trying to promise the world. We're trying, and we sure as heck aren't telling anybody that this is something that we are guaranteed. We're here just trying to help people make money. And when we get big moves like that, you get certain situations. You can't make those situations develop. But when they do, you can take advantage of them and that's what we try to do. So, and it's worked out real well, and we've been doing it for 2 years, and I really, like I said, I'm really excited about what will probably happen next week in one direction or the other. And it could, it could literally even start as early as next week. But one way or the other, we're going to see a big pick of volatility, and I think that will last to the end of the year. Because again, all these institutions, they do performance fear. They're put even if the market's not doing, even if not a lot happens with the Fed, it's going to happen with the Fed. But even if in years where it doesn't, they're still buying their, trying to push up their winners and not and for tax loss reasons, get rid of their losers. And so there's all sorts of volatility, at least until Christmas Day anyway, and usually afterwards too. So we got a couple of weeks here where it should be very, very active and very, very profitable. Like I said, I think tomorrow we're going to see some interesting stuff. Monday should be the same way. Tuesday will probably be really boring. And then Wednesday, the Fed meeting starts on Tuesday, but they have their announcement and their press conference on Wednesday. And that's when things will jack back up again for at least the next 2 weeks. And that'll be really exciting.
Mm-hmm. Right. So, all right, we've been here for 2 hours, Matt. We were only scheduled to be here for an hour, but we got carried away, you could say. So so here's the thing. I'm gonna stick around here. I'm gonna go answer any questions and things like that. Any closing remarks on your end? Just kind of recap this and also, what you're doing in the inner circle.
Yeah, I just it's a very interesting time in the markets, and there's no question in my opinion that we're in a bubble. No question whatsoever. And it doesn't, it's not as much debt. It doesn't matter. Whenever something gets really expensive to where it to where it's underlying fundamentals, it's got to come down. It becomes into a bubble. Maybe it's a smaller bubble. It has to come down. I mean, in 2022, the market went down 25%. We didn't have a recession. So people say, "Oh, well, we're not. There's no way we're going to have a recession next year." So what? You know how many times we've had bear markets without a recession? A gazillion. And you certainly had 20% corrections without a recession. So the chances of that happening, I think, are extremely high. Okay, whether the bubble bursts and fall into a bear market, we'll have to see. But things are going to be very, very dicey. And trading alone in that time frame is very, very difficult. When I showed you some of those trades, we're buying puts and then we're flipping and buying calls, and vice versa. It's just whatever the market gives us. And we have these great indicators to help us do that. And a lot of team players who are helping each other all the time. So, but trading alone is just incredibly difficult. I don't pretend to have all the answers. And we don't. And not every trade is a winning trade by any stretch. But we've done really well with this. And if you have the inclination, to want to be able to be a more active trading with some of your money, don't put all your money, flinging around all the time. Have that, one silo of money, a bigger silo of money in those long-term strategies. That's fine. But again, in the options market, because they now give us the opportunity, we have the tools that those institutions had. It's a great time to be enhancing your returns with these kind of instruments. So I can tell I'm very passionate about the markets. I think what's happening right now is going to be really exciting. But I do worry that if I'm right that we are in a bubble, when it inevitably bursts, a lot of people are going to keep buying on the way down, and they're going to lose their shirts, and they're going to be very painful. And then when the market finally bottoms, they're going to be the ones selling. They're going to be, I can't take it anymore, just get me out. Where we're going to be the ones who've made money on the way down, and we're going to be able to take advantage of it. There's going to be another buying opportunity situation in the next year or two. That is going to be. It's not a once in a lifetime, because you get several of them. We had one in 2000. They had one in 2008. 2008, 2009. They had one in 2020. So we've had several of them. I think another one's coming up now. But those who keep buying the dips all the way down, and they're going to be selling at the wrong time, because they're not going to have any cash to buy it with, number one, and they're not going to have the confidence to do it either. And I think we will. So anyway, good luck to everybody. I hope everybody has a great holiday season. For those of you who join the chat room, we'll be talking. I'll be in there bright and early tomorrow. And next week it's going to be really, really interesting. I can't remember the last time the Fed had a meeting and it didn't create some real volatility. And there's nothing better for a trader than volatility. So anyway, Rodrigo, thanks for hosting. Good luck to the Tigers. I'm a talk to you long before they play before what's his name takes over as their coach.
Thank
A lot of
you.
fun next year, but and go Patriots, and we'll go from there. But seriously though, people, hope you all had a great Thanksgiving. Hope you have a great holiday season. But this time is, again, I'm not trying to scare people. I'm just saying that the odds of next year being a very volatile one are very high, and those are the years where traders do exceptionally well. So
Thank you very much, Matt. I'll see you around here. Okay, see you in the chat room tomorrow.
sounds great. Thanks, buddy.
All right, guys. So I'm gonna stick around here, answer a few questions. As you can see, this is the actual chat room, the live chat. This is live. There's 124 people in there. As you can see, people are literally talking right now. They're calling. I signed them up. I've signed up 99% of the people in these programs in my 5 years here. So I know most of these people. I can definitely vouch for them and tell you it's a great group of people that work together. These are like-minded individuals like you and I that are trying to make money in the stock market trading. And it's great. I mean, you could be there if you want to, you don't have to. Now, I'm going to show you how to set up the push notification alerts real quick before I answer any other questions. So once you download the app, okay, look at this. Once you download the app, it's this one, right? It says Benzinga. There you go. So, all right, once you download that, you tap it, and then at the top right corner, I gotta log in. Hold up. You can use any platform to trade. We have members in over 100 countries, John. So I've signed up people from the UK, Finland, Australia, Ukraine, everywhere. One moment, I'm trying to log in here. Hold up. So this is actually the deal from this Friday. So technically it's already expired, but I gave you guys a little bit more time today so that you can get in. Right, this was supposed to end literally last week, but I'm trying to log in here to the app, guys. One moment. Let me go through some of these questions in the meantime. Hold up. All right, something's going on with my phone. I can't do it right now, but gotta do something there with my account. But basically, you log in. Once you're logged in, you go to the top right corner. There's a little circle with a person inside. You tap that, and then the third row, top to bottom, it's gonna say notification settings. You tap notification settings. The only thing you got to make sure is that the push notifications are green, they're enabled. Okay, so go ahead, throw me some questions if you have any. I'm going to go over this stuff here with you. And then remember, I'm here till midnight to give you this deal because this deal actually expired last week. I was supposed to show you the checkout that has the $1,800 yearly price, but you know, I just wanted to be a nice guy today and give you a bit of an extension on the Black Friday deal. So that is what you see there. So look at this, guys. David says I have a cash account. Okay, perfect. Cash account, there's no limits. I have a cash account as well. I don't like to use margin. If anything, you know, I use a little bit of leverage, but not margin leverage. Let's see. Can we trade on any platform? Yes. Sam, we already went there. I mentioned, so SMS notifications is it's not for Matt's program, HK. So correct. Only the 1 year is in the checkout, not the 2 year. So I'm going to show you this real quick. If you get the lifetime package with Matt, you get Benzinga Pro included, okay? Which is our proprietary research platform. I use it every day. Someone told me to look at Oklo. They did an offering. Oh, okay. This has proprietary scanners, proprietary news feeds. So you can use it all day. Now, back to the checkout here with Matt. Take a look at this, okay? Pretty nice checkout. Now, you can see there's only 1 year. There's only a 1 year plan there. So the 2 year is not there. Just call me. I'll process it with you or by email, whatever works. But only the 1 year is on the checkout. The lifetime package is not on the checkout either. But if you get the lifetime, it includes the Benzinga Pro. Only on the lifetime package, not the 1 year, not the 2 year. Okay. That's out of the way. Now, this is the inner circle chat. Everybody's there. There's people going at it here still at this time. What is it? 8 p.m. Again, this is a global community, so there's people out there that are different time zones, obviously. But for the most part, our members are in the US, the big majority of them. Now, right here, you can see people are talking about all sorts of things, different stocks, things that are happening after hours, regular hours, things that they're looking to trade tomorrow, the next day, next week. You know, like if we're looking at the Fed meeting, so we got the Fed meeting coming up next week. So obviously that's something that's on our minds, and there's going to be a lot of volatility. So just be careful taking long positions. Now, you know how these meetings can go. They can tank the whole market. We don't know what he's going to say, but he's definitely going to start the meeting saying good afternoon. That's all I know for sure. Um, Obi John, which one includes the pro? Only the lifetime package. Okay. Kelly, so you're asking about the universe. The universe is something different. It's not something I covered here. I'm going to cover it tomorrow, actually. But the universe is a program that includes everything we have, including the pro. That is also on Black Friday discount still. There is no checkout for that. Just call me if you have questions about the universe, which is the name of the package. That package, the universe, includes everything we have except ERX and banking on profit. Okay. So if you're looking to join a simple program that has really good returns, like Matt Maley's, you know, simple options, this would be the one because it's only buying calls and puts. You're not doing spreads, you're not doing iron condors, you don't need special privileges in your brokerage. This is the most basic of the most basic type of strategies. And even though it's a basic strategy, doesn't make it a lesser or a more inferior strategy. As a matter of fact, there are people that only like to buy calls and puts because of the volatility. Um, so Janet, if you get the lifetime package, how long do you get the Benzinga Pro for? So if you get the lifetime package, the Pro would become lifetime as well. And I do have to make an important announcement about these lifetime packages. I'm pretty sure this is official, but this is the last month that you will be able to get any lifetime packages at Benzinga. After this month, you will either have to get a yearly or a 2 year plan, and that's going to be as far as it will go. Um, so if you do get the lifetime package, though, you will be grandfathered in. Okay, so don't say that nobody gave you a heads up. There's not going to be an announcement about this or anything. I'm telling you here in this meeting. So the lifetime, this is the last month to get one. Typically, there is a maintenance fee, an annual maintenance fee on the lifetime packages, but with the Black Friday deal, we're waiving that for life. So trust me, at the very least, ask me about the universe. Okay, it's free to ask. Now, okay, inner circle chat. There's still people in there talking, going over different stocks, ideas, and so forth. Okay, then you see Matt's important messages. This is where all the trades are, all the entries, all the exits. Okay. Now, please take this time to ask me any questions about anything. Remember, my job here is to help you succeed, whether it's pointing you in the right direction or highlighting areas that you can work on. Now, some people that do their own trades, they like to look at the PNP masterclass. So the price action and the positioning masterclass, again, these are all separate programs, but you get them if you get the universe package. The universe includes everything with those two minor exclusions. I'm just showing you a few things that can make or break you in your own trading that can help you, right? Having or not having these skills is the difference between making it and not making it, right? You don't want half of the skills. Like you need to have certain skills to succeed in trading. It's not just trade alerts that we help you with. For the past 5 years, the main focus has been to help you succeed, and we know how to do that. It's not just trade alerts, it's also helping you build the skill sets, level up, also throw away some skill sets that don't matter. Like, here's the thing, when you're new to trading, you don't even know what you need to learn. You're just going off by YouTube videos, TikTok videos, financial gurus on the internet. None of these people are gurus at all. They're like legitimate institutional professionals. Matt Maley, great example. Also, Chris Capri is an options hedge fund broker. He had, I'm gonna have to unwrap this. Okay, I'm gonna have to unpack this with you guys here. For yeah, I'm not gonna take long, but basically, these are it's the 5 pillars of success. I even made a little drawing there just to visualize this better for you. Okay, and those pillars are very important. I talk about them all the time. It's something I wish someone would have told me when I started trading, but my goal and my focus has been on how to help people, how to fill the gaps of knowledge that 99.9% of retail traders have. So so that you don't waste time, so that you can actually build on top of those pillars. Consider those the 5 foundational pillars as a literal foundation, right? It's like when you're learning math. You don't start by learning calculus or pre-cal. You start with the simple basic stuff. Important, but like you're not going to be able to do calculus if you can't add or subtract, divide or multiply, right? So that is why it's so important to have the basics covered. Super important to have the basics covered. If you don't, you're just always going to be missing foundational skills. You're always going to come back to the same problems, right? So the PNP Masterclass, people like this because it has 16 modules, course lessons. It's done by Chris Capri, the hedge fund broker. And the whole point of this is to help you get better entries and better exits. And that is the true make or break factor for a trader, either making money or losing money. Why? Well, very simple. You buy high, you sell low, you lose money, right? You buy low, you sell high, you make money. So it's all about the entries and the exits. It's all about timing those entries and those exits. That is a foundational skill set. It's one of the 5 pillars, guys. So if you do your own trades, highly recommend PNP Masterclass. Now, if you're trading options, obviously it's important for you to know all the different strategies and why those strategies even exist. So the option school with Chris has 2 meetings, Monday and Friday at 2 p.m. There is a boatload of mentorship, coaching, hand holding there. There's a full module. Some people here were saying they're trying to learn options. I'm just trying to show you where to go. You can see there's a full curriculum here. And then, everything, dealer hedging, market gamma, single leg, day trading option strategy, swing trading, neutralizing risk, top gamma strike, top put strikes. Then you also have the recordings of the meetings here if you missed them. Okay, Monday and Friday meetings. What is the last time that you were coached, mentored by an options hedge fund broker? Probably never. That could change if you join. So keep in mind, these are all separate programs. You only get them if you get the universe. Now, if you already have a subscription here, you can get a credit towards that. I don't want to drop too much information on you guys right now, but basically, to put it in simple terms, we literally have you covered at like all your bases, more than covered. Now, the best part is that at least for now, you can still get a lifetime package because that's going to help you bring your subscription cost pretty much eliminated after you get the lifetime. So, and that's one of the look, as a trader, you're going to have a few costs. It's like running a business. You will need good subscriptions to level up. That is for sure. Nothing good is free. That is just how life is. So, the next thing are going to be your losses in trading. And if you get a good subscription that actually teaches you, then you're going to minimize those losses. So I can help you with 2 things. I can help you with the lifetime package. I can give you a lifetime package or a deal, whatever you want. And through that, I'm going to help you minimize your losses because you will have losses. I don't know what expectations you have, what you saw on Reddit, but there is no such thing as a 100% win rate. I mean, you probably don't even know like what is the average fund manager win rate. You'd be shocked. You would think that Matt Maley is a god if you know what the average fund manager win rate is. So it's very important that you don't go by what like expectations that you see on the internet. I'm trying to show you what trading really is. So these guys are very, very successful, very good at what they do, extremely good. I've signed up retired fund managers that can't believe how Matt is able to do this, or Chris and so forth, or all these guys we have here. So um just give me a call, guys, or email me after this meeting. I'm just trying to make sure I show you, because I don't know what's the next, when, if I'm ever going to see you again or not. So I'm just trying to make sure that at least while you're here, I can show you all the different ways that we can help you. Very likely you don't even know all the different ways we can help you. But there are people that do need that help. You might not know because you don't talk to those people like I've been doing for 5 years. But there are people out there struggling that are actually trying to level up and don't know how or where to do it. Finally, there is a place that you can do this. I wish something like this would have existed when I started trading 6 years ago, but there wasn't. So we had to come here and build it from scratch. 5 years ago or so, when I started, none of this stuff was here. None of this stuff was here. We just had a weekly newsletter. That's it. Now, fast forward to 5 years, you have a full portfolio of services to help you in all the areas that you need. Live video conference calls, live chat rooms, trade alerts sent to your phone. I mean, I don't know what more we can do. And of course, you always have our proprietary new software, Benzinga Pro. I love this. I use it. I literally use this every day. I'm not exaggerating. I'm not playing. Every day, I'm looking at maybe 50 or 100 stocks. Even if I'm not trading, I'm just looking at different stocks, just following up on things. Like if you're passionate about the markets, if you're passionate about learning, this is a place that you can develop those skills. So one of the pillars is the price action and positioning. What's the other pillar? Options. You need to know options. Even there's so many people that have signed up that are only like buy and hold people, but since the volatility that we've been experiencing, they just can't just simply stare at their portfolio go down every day. So they're able to minimize those paper losses per se by trading stocks, whether it's on the long side or the short side. Okay, if the bubble pops in 2026 January 3rd, are you just going to stare at your holdings go down for a whole year? Look at this, guys. Okay, maybe you guys are new to trading, you haven't really experienced anything like that, because the April tariff thing, that was just like a month or two. That wasn't really that long. It was like a month. But look at this. In 2022, okay, right here, the market fell for pretty much more than a year. It had many fake outs, it had many bounces up, but this was our best, most profitable year with Matt. Okay, there's right there. I mean, you could see that the panic. This is the chart that was upon us in that time. Okay, the market ended up picking back higher, but again, if this happens, because we all are aware of this bubble now, the valuations of OpenAI and some other companies are ridiculous. But if it starts in 2026, look how it started in 2025. Look, it actually didn't start 2025. We dipped, we had a triple top here, and then we had this massive. So just be cautious about starting long positions. I'd much rather be wrong and not lose money than to be right. You know how that goes, right? Than to be right and not make it. So this is the whole point, guys, to really kind of show you what trading really is like. Now, back to the pillars. You got the option school. It's important. You can make money if the market goes up, down, sideways, and you can hedge your investments and your trades. You need to be a modern trader nowadays, especially with the volatility we're getting now, right? You can't deny that. What is another pillar? Software, Benzinga Pro. I just went over that. Benzinga Pro has fully proprietary scanners, news feeds. I've signed up everything from retail traders to institutional people. It's great. You should use it, even if it's just for learning, to getting exposure to the markets. Great stuff. Then you have what is it? What's the other one? The macro. The macro is another pillar, and Matt teaches that. Matt's program is a hybrid. It's a trade alert service, and it's also an educational service because it teaches you how to understand and analyze the macro like a 43-year Wall Street professional. You can learn from that. You see, when you're new to trading, you don't even know what you need to be looking for to learn. It's not just the meeting. You need to open your mind to really what learning really is, right? And what skills are what you need. It's more than a meeting. It's a meeting that can teach you how to analyze a market. And the macro is so important because it impacts every single stock out there. It builds the narrative, it builds the sentiment. So look, especially when you're new to trading, you really don't know what you need to learn. You really don't. And that's one of the things that we're here for, to kind of point you in the right direction so that you don't waste time, you don't lose money on silly trades or mistakes, and you can focus on getting better every day. The next pillar that we have is, I've gone through four already, um, is the community, which are the people, the members that we have. Great stuff. You can learn from them. We used to do conferences before, and I've met many of these people in person. I've known many of these people for years now. I've been here like 5 years now. And I can tell you, we're all in the same boat. We're all trying to make money in the market. So I'm going to go through some of these programs individually. Keep in mind they're separate, but they're included in the universe package. Okay. Trading waves. Chris Capri, trading bull call spreads, 3 to 7 day holding periods. And again, these are push notifications. Everything else, only Matt and Chris, only those two guys have the push notification alerts. Okay. So my recommendation, call me or email me if you are serious about making money in the stock market, if you are serious about learning and building a career. I would like to help you. The Options Masterclass, 32 hours of private coaching meetings with Chris Capri, the Options Hedge Fund Broker. What more do you want? Seriously, this is the peak of learning, guys. Learning from people like this. 32 hours of private coaching meetings. This is a program I did with Chris about 2-3 years ago. There is no checkout for the universe, John. Just call me for that. And look, it also has these lessons that are not in the option school. They're not in Trading Waves. I'm throwing this in for free if you get the universe today, though. Normally, it's not included in the universe. The weekly income multiplier with Tom Gentile. This is going to be your put selling subscription. So Tom Gentile is doing credit put spreads and selling puts in that program. It's one pick per week. And that one is sent to you by email or by SMS. Pattern Trader Pro with Tom. This is going to be bull call spreads or long calls, one pick per week as well. Tom has a meeting every Monday at 2 p.m. Eastern. If you miss it, it's recorded. The Option School, has meetings Monday as well, Monday and Friday, 2 p.m. Trading Waves has a meeting Monday at 2 p.m. Trade Alerts Accelerator. These are going to be option trades with, wait, before I move on, the Pattern Trader Pro is 20 to 30 day holding periods. You can do those trades with 200 or 300 bucks. Weekly income multiplier. These are going to be 30 to 60 day holding periods. Those are going to require you a bit more capital to do those trades, in the couple thousand per trade. So those are going to be longer term. That's selling puts. So you probably would need, a bit of a larger account for those trades. Let's see what else is in the universe. Trade Alerts Accelerator. These are going to be 6 months to 2 year holding periods. These are option trades around the stock picks from Tim Melvin right here. Tim Melvin is our stock picker here. Great stock picker. Portfolio is up like 78% year to date. And this is just buying and holding. So listen to what I'm telling you. Buying and holding, you should have a bucket for it. And you should also have a bucket for options trading. Okay? We solved all the problems you've been dealing with. Okay? You should have a bucket for this and a bucket for that. Hands down. So David, everybody else, pay attention. The Options Masterclass, this program, 32 hours of private coaching meetings with Chris Capri, the hedge fund broker. It is not included in the universe package, but I'm going to throw it in for the people that get it tonight. Normally it's like 5K. You're getting it for free if you sign up today. This is the highest level, and I know because I basically launched every program here from scratch. This is the highest level of education coaching that we have for options. Nothing goes above this when it comes to options coaching. The options school, you learn things there, you get mentorship, you have live meetings, absolutely. But this right here, the options masterclass, we only did it with a small group of 10 people. These meetings are 2 hours each. And it's basically Chris reviewing individually every trade from each of those students on a granular level. Let me translate that. You're going to get immediate, actionable feedback that you can start using for your own trades. This is how you become a better trader. This is how you level up. You're not going to find it on YouTube or TikTok. Stop wasting your time. This is what you need. This is the highest level, guys, of coaching that we've ever done, and we probably ever will for this stuff. 32 hours with a small group of people with Chris, the options hedge fund broker. Now, we still have the option school that has those meetings Monday and Friday, but this isn't the option school, it's separate. Okay. This is also a new tool. Let me launch this for you guys here. This is a new tool that we just launched, and it's not even done yet. We're gonna have more tickers in here. It's not gonna be available on Pro. It's not gonna be available anywhere except for the members of Chris Capri. So look at this. Please pay attention. This is going to help you. What is this? It's an open interest map. How to use it? Look, it says it right there. The consolidated tool shows you at what strikes the open interest is collated at across all expiries. Let me translate this for you. It's going to show you where all the calls and the puts are. So if this is SPY. So right now I can go in here and I can show you where all the calls and where all the puts are on SPY. What's the skew, the top gamma strike, the top put strikes. Look at how many more puts we have open than calls. This tells you right now a lot of people are putting their money on the market falling. Now, this is a great indicator because it not only shows you the chart and the actual contracts, but look in 2023, because we did have a version of this. And so when we were right here on this dip, the skew, like there were so many puts that at one point when everybody's bearish, it's too bearish. And when everybody's too bullish, you're too bullish. And those are indicators on its own. But the cool thing here is that you can actually see the strike prices, and these are all the calls and puts in the universe for SPY. This is updated daily. Okay. Elio, give me a call, brother. I think didn't I just sign you up, Elio, for something? I signed up a couple Elios. Just call me after the meeting, guys. I'm the most accessible person here on that. You know, that's another cool thing. You actually have somebody to call. You have a guy here. Most places they don't even have a phone number. So, they don't even have an email for you to contact. So, I mean, you're definitely getting better service than other places. Let's be real. Look at this tool, guys. It shows you now you can take away the price and just look at the contracts. But if you want to leave the price there with the chart, now we're going to release additional tickers that you can pull up and look up this open interest map. But I'm telling you, it takes years of coding development, paying these people. One moment, guys. Make sure to call me after the meeting. Whoever this is calling, I'm sending you to voicemail. Just call me after the meeting. Um, we're going to be releasing this tool, guys. It's already there. But remember, we're going to be adding more tickers. It's a lot of work behind the scenes. A lot of people, like not me, developers, coders. We have to pay for all this data. This is not free. Like we have to pay for all this data to put it in here and so forth. People that have the Universe Lifetime package, they don't have to pay anything for this. They get a lifetime. So this is just a little sneak peek, guys. We're gonna add more tickers to this. This is only the beginning. This is a great tool. It doesn't really exist anywhere, at least the way that we're planning on doing it. And again, it's just the beginning. All right. Did you like that sneak peek? So what else is in the Universe package? Let's go through this. The yield report with Tim Melvin. This is going to be a macro update. It's a weekly report. Let's just click on it, see what we can find. Okay, look, there's videos every week. There you go. And then there's the dashboard. There's actually tickers there. So there's definitely picks there too. Oops, I don't want to give it away, but it looks like there are stock picks there also and reports. Um, what else is included in the universe, guys? We went through everything. I mean, you pretty much get 99.9% of our programs, services, and then you have a life. Once you have a lifetime subscription to these programs, you're good for life. You're set. Remember, you have life. You get if you get the universe package, you get Benzinga Pro included. So the Pro becomes, lifetime. It's one of the programs, right? That's in the universe. But we've done surveys about this. The people that get the universe, they have seen about an 87% improvement in their own trades. Keep in mind, I'm not talking about the trade alerts from the analyst. I'm talking about people improving their own trades, learning new skills. And it's not just learning these things like what is a call, what is a put, what is a spread. It's the real skill is in how you like knowing how to apply these skills, right? Knowing how to apply them in different trades, knowing what strategies to use, why that strategy, what's the best strike price, what's the best expiration, what is the options flow, what is the best entry, what is the best exit level, how long do I stay in the trade, when do I get in, when do I get out. PMP Masterclass. It's all about it. That's what it's about, guys. So these are the skills that you need. I know a thing or two about helping people get to where they want to be in trading. We've just really got this down. We have this locked in. I've helped over 50,000 people already. There's no reason why we can't help you. I'm telling you, it might feel like there is no help. It's impossible for someone to fix you if you've been doing terribly in trading. But I'm telling you that like there are some actually good programs out there, and there's some people out there that are actually trying to do good and help people. This is one of the places that I can definitely tell you is doing that. I can't tell you how rewarding it is for someone who comes in here not knowing anything, nothing about nothing, and then within a couple of months or a year, they're updating me and letting me know that they're now full-time traders making really good income, six figures. They quit their. Now, I'm not saying you have to quit your job or you have to go into full-time trading. This person was just very passionate, wanted to do that. If that's your goal, what better place to learn that? Now, you don't have to quit your job. Keep your job. This is a horrible job market. You want to keep whatever you got. Okay, it's guaranteed income to some extent. Okay, and this way you can afford to lose money in trading, at least for now. But the whole point is that you don't have to learn by blowing up your account or by taking massive losses. There's a better way to learn. There's a smarter way to learn. There's no reason to make things harder than what they already are. The odds are already stacked against you. So, do yourself a favor, do your money a favor, um, and just make the choice. Right? Do you want to keep winging it? I guarantee you, at one point, sooner or later, you will fail if you keep winging it. I have also been trading for 6 years. I know I've made mistakes. I've blown up accounts. I talk to people all day about this, about their trading goals, where they want to go, what's their story, and so forth. What are you struggling with? And I've talked to so many people in different countries. They don't know each other, but they're making the same mistakes. How is that possible? Because all retail traders struggle with the same things, the same areas. Those are just the patterns that I've noticed here. We've noticed here. We've taken that into consideration when we build and design these programs. So you're coming into a more mature Benzinga research. These programs didn't start yesterday. These people didn't start trading yesterday. They've been doing it for 43, 30 something years. And of course, you already know Benzinga. We're a financial news network. We have 35 million readers a month on our website. We're the news. We're the source of the news. So imagine we give you the software so that you can get the opportunities in front of you. Okay? The software is great, but the software doesn't make the money for you. You have to make the trades. You have to find the opportunities. This, look at the scanner and find your entry and time it and how are you going to trade it. That requires skill. Just because you can go open an account or a brokerage and trade doesn't mean you should be doing it at all. Definitely not. So what is it that you need once you have the software? I'll tell you. You need the skills. The software is great, but it's not as great if you don't have the skills to leverage that software. And the same thing for the skills. You can have the skills, but if you don't have the software to leverage those skills, it's not going to be as great. All these things interconnect, guys. I can tell you for sure that we're positioned here in a unique place to help you that no other company can. I've been around the block for a while. I know what I'm talking about with this. Benzinga is the place you want to be. These guys, all these programs are profitable. Like that's just basic math. We're not even talking about that. We're talking about helping you with your own trades. That's a tall order. Most people don't do that. Most companies don't do that. The time commitment, the resources. But we have been doing that here for a while. So, if you are serious about starting a career in trading or turning things around for the best, call me. I'm literally, it's my job to help you. Okay. So whatever it is that you're struggling with, I'm telling you, there is a way to improve in that area. The first thing is recognizing the area, right? The first thing is even acknowledging that there is a problem, that there is a lack of a skill set or skill sets, right? Because when you're losing money, it's not because you're stupid or you're dumb or the market is rigged against you. It's because you're missing one, two, or more skill sets. Very simple. It does. You don't have to like make more out of it. That's what it is. And when you're new to trading, you don't even know what those skill sets are. You might think you know because you read something on a Discord chat room or something like that. But I can tell you this is where you want to be. HK, you're welcome. All right. Any questions that we have here? Elio, I know we're going to talk after the meeting. Well, I'm glad you find this helpful. That's the whole point, HK. All right, any questions here, guys? Any questions we have here before we wrap it up? Just because I know I got to get on the phone with people and I got to get up early tomorrow as well. So I'm going to be here till midnight still. Do we have any questions here about any of these things before we wrap it up? Look at the Zoom chat. Please do me a favor. Go to the Zoom chat, save my number. If you are trying to get into the stock market, if you are trying to trade options, learn options, improve your trading, find software, whatever it is related to the stock market, I am the guy you want to talk to. Trust me on that, okay? I'm your connect here. So now, by the way, one other thing, if you already have a subscription and you want to renew early, you can renew with the Black Friday deal. Just call me. That's not even a deal. It's only here for the people that are on the webinar. So that's why many of the things that you're seeing here, these specials and things like that, there's no checkout for it. It's only for the people that are here listening, that took time out of their day, that are serious about trading. Those are the people that know about it. So that's why a lot of people get good deals here, because we don't advertise this stuff out there. It's just for the people that are here. So any last questions, guys? I'm giving you guys an opportunity to post a question if you have. I know that you guys will call me with questions anyways. Janet, nice to talk to you. I know a few Janets here. I will call you. Okay. No problem. Call me when you get better. So, all right. If there are no questions, that means that I did my job here today. Okay. So let's do this. Go to the Zoom chat, save my number, call me or email me. I am going to be here till midnight Eastern time. Okay. And I'm also going to be available Monday and Friday. I'm here all day, all week. But I'm just saying for the deal specifically. Okay. For the deal specifically, Call me till I'll be here till midnight, or you can email me. Um, so so I'm just gonna recap the stuff with Matt real quick, okay? Because that's we were here with him for like 2 hours. It's crazy that you guys even stayed here for 2 hours. Like that shows that you actually care about what he has to say. Um, Matt Maley, 43-year Wall Street veteran, chief market strategist at Miller Tabak. So you have all the alerts here. He's only buying calls and puts, 1 to 3 day holding periods. These are the alerts. You get the alerts on your phone. Inner circle chat. This is where everybody is. There's still people in here talking at this time. So it's pretty active. If you're looking for an active community, this is it. This is actually the most active chat room in all of Benzinga, to be frank with you. There are some very smart people in there. We have very smart members, people that have been here for a long time. And you can go in there basically, right? So all day. Recorded sessions, this is where the meetings are. Okay, this is all the meetings that we have on Tuesday. If you missed them, you can watch them there. And when you click live, that's where you go to the meeting. Okay. At the bottom of this blue banner on the left side, if this is too bright for you, you can put it on dark mode like this, or however you want, or light mode. And then right here, make sure you click push notifications enabled. This is so that you get the alerts of the chat room in the computer, in the laptop. Okay. All right, guys. I've been here for 3 hours now. I think that should show you what we're about here, what our goal is here at Benzinga, what we do. So we're going to call it a session. Call me before midnight if you want the deal, for Matt or the universe. Everybody stay safe out there. Don't trade alone. There is help. Okay. There is help out there to help you become a better trader. I'm telling you, there is. It's worth giving it a shot. So we're going to leave it here, everybody. Have a good day. It's Thursday, December 4th. And today is the last day to get the Black Friday deal. Okay. You've been told. So we'll see you guys tomorrow in the chat room. Make sure to, if you have questions about setting up the push notification alerts, send me an email. I'll give you a call. If you call me and I'm on the phone, because I'm getting a call right now I got to take, just hold up a moment, guys. Hey man, let me call you back. I'm still in the conference. I will call you right back. Okay. All right. So, all right, guys. So now I'm officially gonna turn it off. Okay. I'm gonna wrap up the meeting. I'm gonna leave this here, but do me a favor, save my number. Stay safe out there. Don't trade alone. Call me if you got questions. Everybody, good night. We'll see you tomorrow.